Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie. Hi, Tom.
And here are your top stories. Good morning, Francine. Deutsche Bank holds market share in fixed income trading, but misses out on big gains in equities. We'll bring you more of our interview with CFO James von Moltke this hour. Mixed results for big tech. Cloud computing drives growth at Microsoft, but disappointing numbers for YouTube weigh on Alphabet. Plus, it's UK budget day. Chancellor Rishi Sunak is weighing concerns over rising borrowing with calls to help those suffering from higher living costs.
So let's take a look at the futures. Quite a lot going on, actually, in today's trading session, partly because of the stagflationary pressures, which could put a dent on earnings. We also have a Citigroup realigning some of their earnings forecast, and then overall, the worry about U.S.-China tensions. It's putting a little bit of a dampener, Tom, on some of these equities. They're almost up and running.
Yeah, it seems like a very clear tug of war now between the earnings session that we're seeing. We've got 81% of S&P 500 companies beating the forecast versus those inflation concerns that really been underscored in Australia. And we'll talk about that and flesh that out shortly. But essentially what you saw was the 3-year yield getting back to levels that we haven't seen since about July of 2019. Let's see how this is flowing across then to the European markets. The futures, as Francine was saying, pointing lower. You're seeing losses of 0.2% over in Spain, 0.1% lower on the FTSE 100. Looking ahead to the budget from Rishi Sunak and whether there'll be any surprise rabbits pulled out of the hat as we look at what is going to be longer term, many think, a more fiscally conservative stance from the UK government as we look ahead to the BOE's decision next week. The CAC 100 is lower by 0.1%. Let's look at the mixed assets then that we want to be focusing on. The Australian story around core inflation, surprising for the month of September, and that had an impact then on those 3-year yields, as I say. Also, of course, the currency higher. Markets now pricing in as many as 3 hikes to 0.75% by the end of 2022. So pressure on the Australian Reserve Bank, where officials there, Philip Lowe, has said he doesn't see rate hikes until 2024. That divergence then creating pressure. In terms of the US 10-year, you've also seen a move up in yields, currently almost 0.5%, 49 basis points for the US 10-year. There's the flow across from what's happening in Australia and the focus then back on these inflationary pressures and the pressures on central banks. The 3-year just below that 1% yield now for Australia after it ticked above that just a few hours ago. Technology as well, firmly in focus. These Chinese big names over in Hong Kong down 3.6%. Geopolitics, China Telecom being closed out of the market in the US and some tensions around Taiwan, all part of the mix there. Fran.
Tom, if we dig a little deeper into some of the sectors, it's very clear that it's earnings dominating the news, dominating. I have Puma, first of all, raising its sales and profit forecast. Deutsche Bank maintaining market share. Again, a little bit of concern because of the equity division. BASF raising its outlook. And the one thing we also need to look at is some of the other banks, including Banco Santander, and then we look at technology. Now, this is all playing out, which is why, for example, on the healthcare side, just because of some of the vaccines that could be approved for the younger people, certainly around the world, healthcare getting a little bit of a boost if you look at staples, raw materials, and also some of the information technology stocks. Again, we had Twitter in line with expectations, even though Apple changed their data. It hasn't really quite been reflected in the numbers, but we need to look a bit deeper into Alphabet, for example, the parent company of Google. And I know we'll have a full roundup of tech stocks with our Laura Wright.
Yeah, we have Apple as well reporting later today, as well as Amazon. But you talked about the banking sector. Deutsche Bank currently down at 1.4%. You did not see the gains that they had in terms of capital raising and advisory offsetting the pressure on the investment banking, particularly equities. They do say they see client activity relatively robust towards the end of the year, but nonetheless, investors not overly optimistic about the implications of those earnings from Deutsche Bank, as you can see. BASF, by the way, raising prices 36% in the third quarter. The stock is down 0.4%. They raised their forecast for the year. Santander also very bullish, but nonetheless, the stock selling off about 1%. They're confident on the operations of the business here in the UK, but also the US. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Heineken has reported a decline in beer consumption as Southeast Asian markets like Vietnam suffered from a resurgence of COVID-19 cases. Beer volume fell 5% on an organic basis, more than the 3% drop expected by analysts. The world's second largest brewer said Asia was especially weak, with volume slumping 37%. Delivery times for chips posted their smallest gain in around 9 months in October. The lead times, which is the gap between when a semiconductor is ordered and when it is delivered, increased by 1 day to just under 22 weeks, compared with last month, according to research by Susquehanna Financial Group. The data suggests the chip shortage that's affected a broad range of industries may be starting to ease. Robinhood shares tumbled below their IPO price as the third quarter revenue fell short on declining cryptocurrency transactions. Sales from crypto trading slumped 78% from the previous quarter. The company posted a net loss of $1.3 billion, driven largely by equity compensation for employees following its flotation.
We're keeping a close eye on crypto as the regulatory landscape is increasingly uncertain. We're aiming to deliver great new crypto features for customers while being mindful of keeping our platform safe and introducing products that comply with legal and regulatory requirements. Crypto is still very early, and we're excited to be investing in our platform here.
Shares in US sports betting giant DraftKings jumped after it decided not to pursue a $22 billion bid for British company Entain, owner of the Ladbrokes and Coral betting chains. DraftKings' offer of cash and stock represented a 43% premium on the share price, but sources say it was unwilling to meet some of Entain's demands. Tom Francini, you won for a wager?
I mean, always. I never lose against my husband, which means now that I'll lose heavily, significant, and embarrass myself in front of the whole wide world. But there you go. Usually I'm not too bad.
That's a pretty decent record. You've never lost to your husband.
Because I pick
he's
ridiculous.
He's just keeping you happy, isn't he, Francine?
No, I pick actually the ridiculous names with incredible odds, and they win out.
That's the methodology that we should all follow, isn't it? The strategy we should all follow.
Please don't do it when you actually pick stocks. Would be the one thing I'd say on a Wednesday morning at 8:06. Laura Wright there with the very latest on some of these things that we're watching, including bets. Now joining us is Nora Alali from our MLive team. We have a lot to talk about, Nora. We talk about the stagflation that could actually probably hurt a lot of the stocks in general. I mean, there's a global bond sell-off, and it started in Australia.
Yeah, it's a bonds bonanza out there. And, you know, last week we saw that in New Zealand. We saw a very drastic reaction today to Australia because I think, you know, dare I say it, markets are becoming a lot more hawkish here, and maybe a bit of a short-term memory loss here because, I mean, Australia is quite, I mean, I would dub the central banker there low, very dovish, and I don't think that they're going to hike as expected, as the markets expect them to at the moment.
Yeah, 3 hikes by the end of 2022, and Philip Lowe has said it's not going to happen probably until 2024. There's that divergence. There's also that divergence that we're seeing bonds versus equities, confidence still, you're getting to new records stateside on the back of these earnings, and yet the bond markets are screaming concern.
Yeah, absolutely. And going back to your point on Australia, look, back from 2009 to 2010, in an 8-month period, the bank there hiked 6 times, and that really hurt the economy when the Australian dollar hit its peak in 2011, and I don't think central bankers forget that. So on that note, though, the divergence between bonds and stocks, that's something concerning because at some point something has to give, and you've got, you know, BNP Paribas says it's going to be stocks, and they see stocks, U.S. stocks, falling about 2.6%. That's S&P 500 in the rebalancing just at the end of next week because they're expecting flows to go from stocks to bonds, and that's something to watch out for.
I mean, Nora, also something that really caught my eye is the City Earnings Revision Index for Europe, excluding the UK, and it's fallen to, I think, 0%, its lowest level since January. I don't know whether we'll see repricing also because some of the things that we heard in the tech space.
Yeah, I mean, look, generally tech companies out of the U.S., when they're not reporting as, revenue that you would expect them to at this point, that's going to hurt a lot of other, industries out there, primarily because these are companies that have really set these high valuations for themselves, and these targets are quite high. Markets have been very comfortable with them because they're expecting revenue growth there out of them. But realistically, we are seeing growth starting to slow for them. That doesn't mean that it's going to be less growth, but it's just going to mean that it's going to be, revenue growth is going to start slowing for them in the coming quarters. And we're starting to see that hit of supply chain concerns. Apple reporting later today. Very interesting to see what they're doing there with their iPhone deliveries.
That very, very high bar for the tech sector, certainly, and that divergence, the importance of flagging that divergence between equities and bonds and what that could signal. Noor Ali from our MLive team, thank you very much indeed. Okay, coming up, it is Budget Day here in the UK. Rishi Sunak, the Chancellor, prepares to deliver the government's spending priorities while dealing with a stuttering economy, high inflation and rising energy prices. We'll get into the Chancellor's challenges next. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of the ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case, I mean, at least in theory.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 10 minutes, 11 minutes actually to be precise, into the European trading day. The focus firmly on stagflation. Of course, tomorrow we have the ECB. A lot of earnings also, a lot of earnings that could see the end of some of the euphoria that we see in stock markets. There's a great John Author's piece, which I urge everyone to go and check out. He really talks about some of the taxation issues that we're seeing in the US. So overall, European stocks, you can see down some 0.2%, but we really have some standout companies, including Puma, Banco Santander, BASF, some of them raising their forecasts. Now, traders evaluating more evidence of intensifying global price pressures, a flare-up in U.S.-China tensions, and corporate earnings outlook. In the earnings front, Deutsche Bank recognizing that hiring talent has become ever so difficult, while the Chief Financial Officer, James von Moltke, is reassuring investors that the lender is in a competitive position.
It's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent. We've made some very senior hires, for example, in our investment bank and also in the U.S. That's worked well for us. People are recognizing that there are platform strengths here at Deutsche Bank that allow them to compete and succeed here.
Well, joining us now is Indriati van Hien, portfolio manager at Janus Henderson. Indriati, thank you so much for joining us. We'll talk about the budget in a second. We have a wonderful reporter on standby to bring us what the Chancellor will say. But overall, there's inflation concerns, stagflation concerns across the world, and the UK stocks are not immune to it. So what are some of the main fault lines that you see for UK valuations?
Well, I think the first thing to say is that the UK market has lagged global equity indices for many years now, and agree, no equity market is immune from stagflation or inflationary concerns. But actually, if you have a bearish stance on the global economy and think that yield curves are going to steepen, it's actually the FTSE 100 is one of the most attractive indices given its low weighting to tech compared to other global indices, and its higher weighting to banks and commodities. Two sectors that have been very under-owned for a while, and we are starting to see, at least in the larger cap side of UK equities, really strong earnings momentum there. So actually, I would say that on a relative basis, UK large cap quite a good place to be if you have concerns over global over inflation and global growth.
Indriati, where are we in that rotation then, from growth to value here in the UK? How much more window is there for investors to get into that?
Well, what you've seen this year is bond markets, bond yields really oscillate through the year, and we've had changing factor leadership. So in Q1, you had a big rotation towards value as US 10 years went up to 1.5, but then you saw a big retracement over the summer, all the way back to 1.2, where growth stocks started to outperform. You've seen again that move up to 1.7. So I'd say that in terms of, where from here the incremental bond yield, the incremental move in bond yields is probably lower. So you're probably catching the end of this part of the growth value from growth rotation, I would say. But you are actually seeing large sectors. Yeah, sorry.
Yeah, no, go ahead. Finish your thought.
You are still seeing some very large under-owned sectors, as I mentioned, banks not fully reacting to that yield curve steepening. So there is definitely still value there, and similarly in oil and materials. But as we can see from COP26 and the increasing prominence of ESG, these are sectors that many mutual funds, at least, are restricted from owning. So you're still seeing good value there because you're not seeing huge amount of flow into that part of the market. Sorry.
Have you had to, Indriati, change your earnings per share growth forecast for UK assets at all?
No, because I would say that actually looking 1 year forward, the growth forecasts for 2022 are actually quite muted in the context of still above trend GDP growth. So what you're getting in the UK is actually some stocks trading on very low multiples because of very low expectations, on top of low forecasts, which would still have scope to be upgraded, I think. And especially, again, in the FTSE 100, you're seeing some very strong earnings momentum because of those big sectors, such as oil and materials, and the commodity price upgrades that are driving that earnings momentum.
Okay, Indriati van Hien, portfolio manager at Janus Henderson, staying with us. Let's switch focus to the details of the UK budget, which, of course, will be announced later today. Businesses are looking to Rishi Sunak to repair their strained relationship by doing more to spur investment and ease the tax burden. Joining us now is Bloomberg's UK economy reporter, Lizzie Burden. Lizzie, what are we expecting from the budget today?
Well, Tom, we're not expecting a big expansionary budget from Chancellor Rishi Sunak today, and that's because of the inflation backdrop. He's not going to want to trigger an even more aggressive response from the Bank of England, which would only increase the cost of servicing the government debt burden. On the other hand, if he isn't generous enough, he risks choking off the economic recovery at a time when COVID cases are rising in the UK and other countries are still in boost mode. So how is he going to thread the needle? We're expecting Rishi Sunak to focus his budget on addressing the cost of living crisis in the UK. He's likely to raise the national minimum wage, increase public sector pay, and continue at least the freeze on fuel duty. But apart from those measures, unless there's a big rabbit out of the hat moment, as chancellors have been known to do in their budgets, we're expecting him not to unleash the spending until the run-up to the next election, which could come as late as 2024.
Lizzie, thank you so much. Lizzie Burthen there with the very latest on the budget. Let's get back to Indriati. When you look at some of the things that we know, and a lot of it has been flagged, of course, to markets and the press, which is minimum wage, some of the things that Lizzie was talking about, is there anything that could surprise to the upside, Indriati, that gives you more conviction about investing in UK assets?
Oh gosh, surprise to the upside. Well, I suppose it will just be potentially an unfreezing of the personal allowances or anything that he can do to keep real wage growth going. My view is very much in line with your reporters. We talked about rising inflation and central banks becoming more hawkish. Monetary tightening is going to force the Chancellor to tighten fiscally, and we're lapping some very tough comps when it comes to the amount of government spending governments across the world are actually going to undertake. I think that surprising to the upside would be for certain sectors such as banks, house builders and tech stocks, because these are all stocks that have been blighted in recent weeks from rumours of an online sales tax coming in. We need to see more detail there. The banking surcharge levy is likely to be reduced to sort of give the city more of a chance to recover following Brexit, and also to sort of offset the fact that underlying corporate tax rates are rising from 19 to 25%. So there are rumours that the banking levy is going to reduce from 8% to 3%, which would be good news for banks. And similarly, UK house builders have been hurt by uncertainty around UK residential property developers tax. So any detail that we can get there that can sort of allay concerns around the unknown would be helpful for those particular sectors in the market.
Indriati, what is the resilience of the UK consumer if we look ahead to the end of the year?
So, we talked a lot last year about the 200 billion of household savings that were built up during the pandemic. Obviously, inflation and rising energy prices have been well trailed. For certain parts of the UK consumer, that's a really big issue because energy prices are 30% of their household budgets. But actually, for a lot of UK consumers, that's a lot lower. It's sort of 2 to 5% of their household spending, so likely to hurt them less than people are expecting. I think that on top of inflationary rises, you are seeing increases in real wages. So whilst inflation will dampen budgets, there is that buffer that was built up during the pandemic through strong householder saving, which I think will continue to drive some resilient demand from UK consumers. And indeed, that is what we're seeing in UK retail earnings reports. You are seeing not an issue with demand, really an issue with fulfilling that demand and overcoming the issues of those bunged up supply chains. So for the time being, you are seeing still a very resilient UK consumer, I think.
Okay, Indriati Van Hien, great insights, portfolio manager at for UK equities at Janus Henderson. The UK Alpha Fund there, by the way, up 17% year to date. Opportunities in banks, oil, and materials. Okay, coming up, mixed results for big tech. Cloud computing drives growth at Microsoft, but disappointing numbers weigh on Google. We'll get the details next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and what changes they are actually bring to this market.
Welcome back to the Open. We're 24 minutes into the European trading day. The Stoxx Europe 600, the benchmark for the region, down 0.1%. The futures, though, in the US pointing to gains after another solid close on Wall Street. Earnings and inflation, the two divergent powers and pressures that investors are weighing up. We're looking ahead to Apple and Amazon as well later today. Talking of which, the tech titans, Alphabet, Microsoft, and Twitter reported earnings after the bell on Tuesday. Bloomberg's Laura Wright has the details. Laura, why did Alphabet shares fall then in post-market trading?
They fell because there was a miss with the cloud business coming in below expectations. The unit is actually loss-making, although the CEO Sundar Pichai on the call, he talked about continued momentum. Year-on-year revenue growth was up over 40%. There was also downside with the YouTube business, missing sales in part due to those iOS privacy changes. But the real darling for Alphabet is the advertising business. And you can see from my chart here, quarter on quarter over the last few years, how that advertising revenue has continued to grow, culminating in this quarter $53 billion US, and that is because of a surge in retail, travel, and media.
So what are the key takeaways, Laura, from Microsoft and Twitter?
Well, Microsoft, it was a beat across the board, and it's extraordinary. Over the last 17 quarters, Microsoft has reported double-digit revenue growth, culminating in 22% for this quarter. That is because of the intelligent cloud business, Azure tying up a lot of deals. And if we flip up the board, we can talk about Twitter as well. Twitter, those privacy changes I referenced earlier, they led to negative earnings for Facebook yesterday. But for Twitter, the impact was negligible, and the metric that analysts are really looking at is monetizable daily average users, and that came in at 211 million. Francine, Tom.
Okay, Bloomberg's Laura Wright breaking down the tech earnings, a couple of other big names as well on the docket for today. Front and center, of course, Apple. Coming up later in the program, we'll bring you more of our conversation with Deutsche Bank CFO James von Moltke. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не просто, вот в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. Ну, то есть второй будет проще.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Deutsche Bank holds market share in fixed income trading, but misses out on big gains in equities. We'll bring you more of our interview with the Chief Financial Officer, James von Moltke, this hour. Mixed results for big tech, while cloud computing drives growth at Microsoft, but disappointing numbers for YouTube weigh on Alphabet. Plus, it's UK budget day. The Chancellor Rishi Sunak weighing concerns over rising borrowing, with calls to help those suffering from higher living costs. So there's quite a lot of earnings in the mix overall and driving markets. Plus, we always talk about stagflation, Tom, and the dangers of that.
Yeah, and that really has been front and centre as well from what we've seen over in Australia, with that core inflation coming back very strongly above those forecasts. Markets now pricing in 3 rate hikes by the Reserve Bank of Australia by the end of 2022. That is despite the fact that Philip Lowe, the head of the RBA, has said he doesn't see any hikes until 2024. So that position in terms of the pressure between the markets and what the central bankers are saying as inflation looks stickier, at least in many people's eyes. In terms of the European stock 600, you're looking at losses of 0.2%. We'll look at sector by sector shortly. The UK, of course, in focus as a result of the budget that Rishi Sunak will be unveiling. There's been a drip of announcements over the last 7 days or so. We'll see if anything surprising from the Chancellor later today. That's the big one for the UK, currently down a 0.1%. The DAX is lower by 0.3. You've got those Deutsche Bank earnings. We're talking to the CFO. They are holding their market shares relatively stable in terms of the earnings, but nowhere near the kind of gains that you saw in terms of trading activity over in Wall Street. So that distinction between European banks and US banks front and center again. Santander, by the way, positive, particularly in the UK and the US markets. The CAC 40 is lowered by just 0.1%. Let's switch it on and have a look at how things are playing out sector by sector. Travel and leisure at the top, real estate, technology, travel and leisure, the 3 main gainers on a sector by sector basis, but only modestly, 0.3%. At the bottom of the list, you're looking at basic resources, followed by autos and banks. Deutsche Bank, part of that, no doubt. Disappointment there, again, around the trading activity. Down by 1.5% in terms of basic resources. We continue to talk about the strength of these energy prices. A bit of profit taking, it seems, in today's session. That is the shape of play, 30 minutes into the trading session here in Europe. Let's turn the focus to China, Evergrande. Chinese authorities have told Chairman Hui Ka-yen to help pay the struggling property developer's debts with his own personal wealth. On the phone with us to discuss is Bloomberg's David Scanlon in Singapore. David, if his wealth can't put a dent in the debt, what is the thinking then behind Beijing's directive to the founder? It's quite unusual to see a founder having to sell down his assets to pay off potentially bondholders.
It certainly is, Tom, and certainly it would buy China a little bit of time, but the question is how much. Now, clearly, Chairman Hui is a very wealthy man. He's got assets of about $8 billion. That's well down from what it was a few years ago. But that doesn't go very far when you think of their total liabilities of about $300 billion. He's been able to, or the company's been able to, make some coupon payments, $83 million last week, $40 million potentially this week. We'll see if that gets paid. But pretty soon you're going to get into from millions to billions, and that's when his bonds come due. Next March is a $2 billion bond due, and $8 billion all of next year.
Morning traders, please place your order to buy euro at 1.16.035. Okay, because of strategy, I am going to place an order at this level. If you want to copy this trade, please do so. Please follow me, stay with me, and we will close this trade with profit. Okay, guys, I'll speak to you later.
Saying pay your debts, we'll try to help you as much as we can, but they're not offering any kind of rescue. These companies are on their own, and they have very little access to markets. That's the problem, because rates have gone up so much. When it comes for these bonds to mature, they can't be rolled over because it's so expensive. So this sector is really not out of the woods yet, and that's being shown in the market. We've got Evergrande, for example, trading still at about 25 cents in the dollar, which clearly indicates people are expecting some kind of restructuring or default here, Rafi.
Yeah, David, what are the details around the time frame that we're looking ahead to give us a sense of how this is all unfolding?
Well, really, the clock is ticking on these maturities that are coming up early next year, but it's just an avalanche of coupon payments really across the sector, and that's being reflected in the markets. There's still a lot of concerns. There's a lot of, particularly the weaker companies, the smaller ones, are going to have trouble getting through this. Some of the larger developers with better balance sheets are probably going to come out okay, but there's a lot more pain to come, I think, in this sector.
David, thanks so much. David Scanlon, there, our Asia Finance editor, joining us on Evergrande. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. 3 key U.S. senators have released legislation that would require companies reporting more than $1 billion in profits to pay a minimum 15% tax rate, even if they qualify for lots of tax breaks. The proposers, including Elizabeth Warren, say the plan would raise $300 to $400 billion over 10 years. It would come as an alternative to increasing the regular corporate income tax rate from 21%. The Queen will not attend a reception next week at the United Nations Climate Change Summit in Scotland. Buckingham Palace said, following advice to rest, Her Majesty has regretfully decided that she will no longer travel to Glasgow for the start of the COP26 talks. She will send a video message instead. A panel of US experts say the benefits of a COVID-19 vaccine for young children exceed its risks. The FDA Vaccines Advisory Committee voted 17-0 with one abstention to back the Pfizer-BioNTech jab for children between 5 and 11 years old. The sign-off sets the stage for a likely US authorization in the coming days. Environmental group Greenpeace is calling on the European Union to ban short flights on routes where a train journey under 6 hours is available. More than a third of the 150 busiest short-haul journeys have a viable rail alternative, including popular routes like Paris to Amsterdam, Madrid to Barcelona, and Munich to Berlin. The group wants more government funding to improve rail infrastructure and make train travel cheaper. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura Wright, thank you. Okay, coming up, the road to COP26. Big banks have not quit fossil fuel. JP Morgan, Citigroup and Bank of America are earning hefty fees from the oil, gas and coal industries. We'll bring you the story next. This is Bloomberg.
the energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic, and there are a handful of things going on. I think all over the world, there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Okay, guys, we need to cancel this order. As you can see, it moved substantially higher, so we didn't have chance to fill this order. And okay, if you already fill this order, you know where to place your stop. For us, we trade real money, so we will cancel for time being the order to buy euro, and we'll look for other good opportunities to trade. Okay, stay with me. I'll speak to you later, guys.
We have a lot of earnings, really from everything to cars, a lot of the banks reporting, some of them missing, some of them doing better than expected. But the pressure that we have been feeling the last couple of weeks in terms of stagflation is weighing certainly in European stocks. And tomorrow it's a big day. It's European Central Bank Day. I mean, we've had quite a busy week, Tom, simply because, so if you look at earnings, it hasn't been a bad crop at all. And then there was a Citigroup index that I've really taken to heart, just because they say, look, going forward, it's going to be much more difficult because we're just seeing the tail end or the start of the supply chain issues.
Right, so that peak earnings question, peak profitability, peak earnings, is that where we're at now? And if we are, what are the catalysts going forward in an environment where central banks are under pressure to hike rates?
We're also looking at coffee. My coffee just got more expensive. I mean, there's a brilliant Bloomberg piece, and I know, I mean, we talk about it flippantly, but this is actually a real market story. Because of supply chain issues, it means that, there's less supplies of Arabica, the expensive one.
Yeah.
And so Robusta, which is meant to be cheaper, not as good, the coffee expert says so anyway, those prices have also gone up quite significantly.
So I confess, and I mentioned this during the debate, I didn't know the difference between Robusta. I mean, strike me down. But you are the queen of coffee. So at some point we need a lesson and a taste test with Francine on set. But this is a real issue, Francine, for you.
I mean, I feel like this is why we're the match made in heaven. I'm sure he's a tea drinker.
My
like
coffee ignorance.
Every big Brit. Now, Deutsche Bank's trading revenue dipped as it missed big gains in equities after exiting the business. We've been speaking to the bank's CFO, James von Moltke.
The current rate curve is already beginning to help the banking industry. So as we see rates go up, in our case, the current curve is worth about 150 million in revenue terms, more for us next year than we thought a year ago. So that's a help. And that rises to about 500 million euros in 2025. In fact, more than that, on the current curves. Should inflation rise further and rates move up further, more benefit from the banks. And that's very helpful after a long period of low and negative interest rates. Now, the economy, going to the front of your question, look, when we talk to clients, corporate clients, they see inflation in their supply chains, and they are looking for ways to pass through those inflationary pressures in their pricing. And we are seeing in the debate about how other things like wages would adjust to those pricing pressures feeding through. And so there is, of course, a risk that it isn't transitory.
You were able to attract a lot of money in there. It does seem that your target that you were hoping to get by 2023, you're far ahead of that, and all the targets will be met. So how much appetite is it from the investment community and the inflows that you're seeing, particularly on the ESG space?
The appetite is very strong. So in our asset manager, DWS, revenues were up 17%, assets under management up over 20 billion, and that reflected inflows of 12 billion, including 5 billion, to your point, in ESG. products, which is very strong, sort of record growth in that product area. On the Deutsche Bank side, we've been measuring sustainable financing towards a target that we'd set initially for 2025 of 200 billion. We brought that forward to 2023, and at this point, we're at 125 against that measure. So we see sort of growing appetite for these products and a growing acceptance in the market and increasing sort of product areas where green ESG sort of rules and taxonomies are in place and are working really well.
And what about fixed income? I mean, that's usually the unit that the people look at Deutsche Bank. You're competing with big U.S. banks. How are you going to stay competitive on that?
Absolutely.
It does seem the market is a little bit perhaps crowded.
And there, I think we performed in line with the market, which again is good against what was an outperformance last year in fixed income. And it demonstrates that we're really consolidating our market shares. We've continued the progress, I think, since 2019, since we announced our transformation, our restructuring. We've focused the business on core areas where we could be competitive. And as we're seeing, the client engagement, the momentum, the progress in the business is really showing through.
Deutsche Bank CFO James von Moltke speaking to Bloomberg's Maria Tadeo. Maria joins us now from Frankfurt. Maria, great interview. What did we learn then from the earnings?
Yes, and you know, Tom, I know you mentioned the investment banking unit where revenues were down, but what Deutsche Bank argues is that this comparison, especially from last year, is not entirely realistic. The market is not as exuberant as it was before. When you compare it, however, to U.S. banks, you do see that they lost momentum on that front. Now, in every other metric, however, especially in the asset management business, they were able to attract big capital inflows. The bank says that once again, this proves that the turnaround story at Deutsche Bank is working. The other thing that you played on that clip there, which also really caught my eye, is he was very clear the macro picture in Europe is changing and it will benefit banks. He says just the conversation around inflation, perhaps more normal monetary policy, and perhaps a more normal rate guidance going into the future is going to make us a lot more competitive. Over the past 10 years, we've been competing in a negative rate environment that puts us behind U.S. banks, and that is already changing in a way that could be much more profitable going into the future.
Maria, where will they start growing? As you say, the corporate banking unit, but also the retail division, both suffering because of the negative rate environment. Apart from things that are not out of their control, what can they do better to make sure that they're on a solid growth path, so not cutting anymore?
Yes, and you know, Francine, when I asked that question, you know, what does the future look like for Deutsche Bank? He says that it really is about making strategic operations, but also strategic hirings, which again feeds into that conversation that we're seeing on both sides on the Atlantic in terms of the talent war. And he says at Deutsche Bank, we will be making strategic hirings in the United States, especially when you look at M&A, and in Europe too. Also, he was very clear that when you look at compensation, and this is where the tension is across the channel, who's going to pay the best, the more to attract the talent, he says we will stay competitive, so money should in principle not be an issue.
Okay, Maria Tadeo in Frankfurt with that important interview with the CFO of Deutsche Bank. The stock, by the way, down more than 5%, dragging on the banking sector as a whole here in Europe. And as we approach COP26, the focus is firmly on getting to net zero, of course, and big banks say they are committed to financing those goals, but they don't seem to be able to quit fossil fuels. Since the Paris Agreement in 2015, global banks have pumped almost $4 trillion into oil, gas, and coal. That compares with the $800 billion that went into green projects during the same period. For more on this, our ESG editor, Tasneem Broga, joins us from Copenhagen. Tasneem, why is it so hard for big banks to quit fossil fuels?
Good morning. Yeah, well, it's been a lucrative business. And I guess the bank industry would tell us that part of the reason it is difficult is you can't do it from one day to the next. They have long-standing relationships with a lot of these clients. And their point is that they want to help them through the transition. They also make the point that there simply aren't enough renewables to sort of, from one day to the next, allow us to cut off and stop bankrolling fossil fuels. On the other hand, they seem to have been sort of caught off guard by the very rapid change in sentiment as we move toward COP, and as we get more and more data from scientists from the UN that really makes alarmingly clear that we're on the wrong trajectory in terms of keeping warming to 1.5 degrees. So there is a sort of a sense of, you know, the sentiment has changed, the time has come, and it's sort of really, it's not up to banks any longer to be financing fossil fuels without a transparent path to moving away from that business model.
Tasneem, how hard is it for financial institutions actually to define ESG, just because they all try and do it, but it's all different from one another?
Yeah, I mean, it's a really good question, and it's kind of the $1 million question at the moment. So the ESG market has just mushroomed exponentially. It's projected to be equivalent to more than $50 trillion in value by 2025. Now, the problem is that that's happened largely with regulators not at the wheel. They've caught on in the meantime, and this year, especially in Europe, there's been a sort of a huge push and a huge crackdown. We've got SFDR, which is essentially an anti-greenwash regulation in Europe, which is kind of leading the way, which is an attempt to sort of define what ESG is to force asset managers and the rest of the financial industry to kind of, live up to a single set of definitions. But we've seen that, it is sort of catching some on the wrong side of the regulations, like DWS is, as we know, being investigated in the US and in Germany. They obviously deny all allegations of misstating their ESG assets. And this morning they actually did very well, as we saw in their earnings. But the question is a big one, and even the CFO of DWS this morning said that how to define ESG remains an open question.
Okay, the importance of the definition around ESG. And Tasneem, I know you and the team have been looking at this new fund coming from Al Gore, of course, the former US Vice President, and of course, the man behind The Inconvenient Truth, and Goldman Sachs. What is Al Gore's fund aiming to do?
Yeah, so they define it as a venture more than just a single fund. But I mean, their point is that while ESG has been a very sort of necessary movement, it hasn't got us to where we need to be in terms of reining in emissions and keeping warming on track for 1.5 degrees. So what they're saying is it needs to be impact, and impact needs to become a mainstream sort of financial investment strategy, and it needs to be climate target impact, where you really sort of link the strategy to this 1.5 degree metric so that it's measurable and it's transparent. And their point is that a lot of that requires moving into darker markets, into private markets, into industry like steel and cement, where you can really sort of bring about a meaningful transition and also a very rapid decarbonisation, which is what we need if we're to get to the 2030 goals and the 2050 goals that are enshrined in the Paris Agreement.
Thank you so much, Tasneem Brugger, there, our ESG editor in Copenhagen. Of course, we'll have plenty more stories that Tasneem and her team will bring to you ahead of COP26. Also ahead of that, it starts on next Monday. The U.S. Special Presidential Envoy for Climate, John Kerry, joins us for an in-depth discussion of the challenges of climate change diplomacy and the chances of a breakthrough. Catch that full interview on Leaders with LACWA. It starts tonight at 9:30 p.m. if you're in the U.S., or tomorrow, 7:30 p.m. UK time if you're watching in Europe. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Delivery times for chips posted their smallest gain in around 9 months in October. The lead times, which is the gap between when a semiconductor is ordered and when it's delivered, increased by 1 day to just under 22 weeks compared with last month, according to research by Susquehanna Financial Group. The data suggests that the chip shortage that's affected a broad range of industries may be starting to ease. Heineken has reported a decline in beer consumption as Southeast Asian markets like Vietnam suffered from a resurgence of COVID-19 cases. Beer volume fell 5.1% on an organic basis, more than the 3% drop expected by analysts. The world's second largest brewer said Asia was especially weak, with volumes slumping 37%. Robinhood shares tumbled below their IPO price as third quarter revenue fell short on declining cryptocurrency transactions. Sales from crypto trading slumped 78% from the previous quarter. The company posted a net loss of $1.3 billion, driven largely by equity compensation for employees following its flotation. That's the Bloomberg Business Flash. Tom, Francine.
Okay, Laura, thank you very much indeed. Coming up, taxing times. Billionaires Ray Dalio and Larry Fink say they would pay more in tax, but only if funds were spent well. More on that next. This is Bloomberg.
lost its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm not even sure where that money is well spent now. I think this is one of the issues today. But I would agree with everybody. If we could find solutions where the money can be directed in a proper way, you know, I have more to give.
If it raises productivity and creates equal opportunity, that we can't just talk about the raising of money, we have to talk about the usage of money and how that's employed. So that's part of that picture. But yes, if it accomplishes those things, I would support it. I'm not sure that it does.
Larry Fink and Ray Dalio, they're talking tax, saying they'd pay more, but only if the money was put to good use. Well, they spoke at Saudi Arabia's flagship investment conference. Now, of course, a lot of the chat is also on taxation in the U.S., Tom. So we look at taxation, you know, that 15% proposed by Democrats. Unclear to me exactly what that means or how that's different to the OECD proposal of 15% tax. If it means that if you literally look at the balance sheet and then you bring it home so that that taxation goes, for example, to the U.S. instead of Ireland.
Because this is about closing those tax loopholes in the U.S., and they seem to have some consensus. So some of those holdouts within the Democratic Party seem to be coming online with this idea that you have a basic base rate of 15% tax for the highest earning companies in the country to try and avoid these loopholes. So we'll see if that gets through. Interesting to hear these individuals talking about their reluctance or what would what would change their views on paying more taxes.
Yeah, I have to say, without a doubt, my morning must read is actually the story by John Author saying, look, the concern is that, or the markets are liking the fact that there's not much going on with tax loopholes in the U.S. More Bloomberg shortly.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look great.
the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
I sure do think there's a high probability that's going to happen. The president needs to take something with it by the end of the week.
If it raises productivity and creates equal opportunity, that we can't just talk about the raising of money, we have to talk about the usage of money and how that's employed.
I'm not even sure where that money is well spent now. I think this is one of the issues today. But I would agree with everybody. If we could find solutions where the money can be directed in a proper way.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, 27th of October. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Deutsche Bank weathers a slowdown in trading. Jens von Moltke says the bank is in a war for talent as it consolidates its recovery in European banking. Big tech also posts mixed results while cloud computing drives growth at Microsoft, but disappointing numbers from YouTube weigh on Alphabet. And U.S. Democrats propose new corporate tax legislation to make companies pay 15% on profits they report to shareholders. Now, first thing is first, let's quickly check on the markets. A little bit of pressure for a number of reasons. First of all, it's U.S.-China tensions. Also, inflation surprising on the upside in Australia. It's weighing on European stocks in general. We have a lot of earnings. Now, it's a bit of a mixed bag. So, for example, we had Puma raising its sales and profit forecast. We had Deutsche Bank maintaining a market share. Santander saying it would significantly beat some of the profit shares. So if you see, for example, the DAX, interesting. If you look at Deutsche Bank, one of the biggest losers, despite actually forward guidance that was pretty good. And then I'm also looking at iron ore, repricing some of the materials stocks overall. The other one that we're looking for is BASF coming out with earnings today, also raising its outlook for the year on the back of higher products or higher prices for some of those products. Again, that's playing out in the various jurisdictions that we look at. The DAX down some 0.2%. The UK pretty much flat again. The UK, it's a big day because of the budget day today. A lot of the things that we're expecting has already been flagged in, but it is white, commodity rich, and then the FTSE MIB also down some 0.2%. So as traders consider everything from U.S. corporate tax to inflation and the UK budget, let's get into the market conversation now. We're joined by Francesco Sandrini, Senior Multi-Asset Strategist at Amundi. Francesco, as always, thank you so much for coming on. The market is a little bit in a wobble. It doesn't really know what to look at. Should it focus on inflation concerns and repricing of monetary policy, or should they be focusing on, okay earnings news so far?
Both the aspects are very much part of the same story. So for sure, we are seeing a slowing down in some indicators in terms of growth, paired at the same time by increasing pressures. We have reviewed our models in terms of inflation, especially in the States, and this speaks about an increase of probability to have a stretch on these inflation pressures in the first half of the next year. And this is very much what companies in this phase are feeling as well. You were discussing before about a mixed bag when talking about the earnings. So there are companies that are feeling in some sector more than others the pressures in terms of margins, and in particular in consumer staples, in consumer discretionary, in industrials, in materials. These are the sectors we are looking at to see the space of disappointment. Of course, we saw yesterday the big tech company reporting, and this is a different story and a different pattern.
Yeah, and Francesco, we'll get to that in a second. Overall, do you have to revise downwards your, earnings per share forecast for earnings?
No, I think that we are rather surprised on the opposite side, at least for the States. In Europe is a slightly of a different story. The composition of the benchmark and the indexes in Europe bodes for this pricing power pressure from inflation a little worse than in the States. But I would say that having reported that 20% of the company in the States and 83% of them have been surprising on the upside, I have to say that this earning campaign is boding pretty well. And the equity results in the market with the index quite close to the maximum are speaking about that. So we continue to be quite constructive on equity.
Okay, Francesco, we'll get to that in a second. I mean, some of the things that, of course, that, we worry about is inflation. Do you worry about stagflation? Should we worry more about the stag than the inflation part of the equation?
For sure, the stag, the loss of acceleration in terms of growth is material, is there. Talking about a negative growth is very premature. We are at least a couple of years before this moment to come. So it's kind of a mild stagflation, or if you wish, the second derivative using a mathematical jargon of stagflation. But yes, I think that looking into growth, there are things that are a little worrying us, especially centered on China, where we have an outbreak of COVID that threats to have further closures. We have the real estate carrel that doesn't find a bottom. Still, we are talking about a new company defaulting on part of their debt that is a modern land. And also some of the statements from central banks like the Bundesbank on the German economies are to some extent casting the question whether this slowdown in growth that at the moment we are seeing only in some indicators and in quite a mixed bag of statistics is really harder than eventually could be seen at the moment.
Francesco, thank you so much. I love the fact that we talk actually about deviations and, derivatives. We usually do that only on a Thursday at 9:30, Francesco, but we'll let you off and we'll do it on a Wednesday at 9:05 UK time. Francesco Sandrini from Amundi stays with us. Now, Deutsche Bank posted third quarter revenue and net income that were just above what analysts had expected as it set aside less money for bad loans. Here's the bank's CFO, James von Moltke, on client activity for the quarter.
Market conditions were more muted in the third quarter, so volatility was relatively low, but client engagement was high and actually increased as the quarter went on. So there is activity out there as clients hedge, as they position for what is in fact a changing environment out there.
Well, joining us now is Bloomberg's Maria Tadeo, who conducted that interview. So Deutsche Bank stock significantly down, Maria, despite the bank saying positive things and actually posting positive results. So what's the market looking at?
Yes, Francine, and the stock, as you say, is significantly down. Is a very different reaction to what Deutsche Bank was presenting this morning. They said, essentially, when you look at every metric, we beat and did better than expected or in line with expectations, except for the investment banking unit. But that was expected. Last year was extraordinary at Deutsche Bank. The conditions this quarter were much more normal. It wasn't as exciting as it was last year. But a lot of this could be, Francine, just simply to the fact that U.S. banks did have a blowout earnings season, and that may have readjusted expectations for Deutsche Bank. So the market was, based on the stock reaction, probably looking for something much more upbeat, even if, as I say, some of these numbers Deutsche Bank does say are in line or better than expected, but it does seem that there was a readjustment in terms of what the market was hoping to get after the U.S. banks did so well.
Yeah, Maria, we also have Citigroup analysts actually noting that the better-than-expected profit was mainly due to lower provisions, and they also mentioned that the unchange in guidance or in dividend might also disappoint some investors. Our Maria Tadeo there with the very latest from Frankfurt. Let's get back to Francesco Sandrini, Senior Multi-Asset Strategist at Amundi. Francesco, I don't know whether you're interested in some of the financial stocks and banking stocks as a play against inflation.
Yes, of course, that's an important part of a strategy that aims to forward-looking and to take account of the inflation pressures. Normally, when there are expectations on inflation, term structure and curves in the interest rates tend to technically steepen. It means that we see expectations that are feeding through the longer part of the curve. This is creating the condition for better revenues for banks, in particular related to the intermediation profit. So banks and financials are a natural stock to hold holding the portfolios when there are pressures in terms of inflation and interest rates are reacting. So yes, of course, Francine, that's an excellent point, and we are constructive on value sectors and financials as well as part of it.
Francesco, thank you so much. Francesco Sandrini there from Amundi. He stays with us. We'll talk a lot more about some of the things that we're seeing in the market. In the meantime, Robinhood actually falling some 9.5% in pre-market trade. Yesterday, they came out with some earnings. They were disappointing just simply because of the amount that they were transacting, I think, in, for example, some of the cryptocurrencies. So Robinhood plunged after revenue missed, weighing down by about a 78% drop in crypto transaction revenue from the previous quarter. You can see Robinhood now down 10.5%. Coming up, we talk tech. Cloud computing drives growth at Microsoft. Disappointing numbers for YouTube weigh on Alphabet. So we'll have a full tech roundup. This is Bloomberg. When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
Not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, earnings season in full swing with companies flagging concerns about the impact of a global supply chain crunch. Let's have a look. First of all, Google says it expects some supply chain challenges as it rolls out the new Pixel 6 series of smartphones. Its parent, Alphabet sales, that topped estimates, but YouTube and cloud computing divisions actually disappointed. Then Microsoft's quarterly revenue climbed 22%. Its cloud computing business beat forecasts. Its Xbox business has been held back by chip supply chain snags, which it expects to persist into next year. And AMD sees supply chain constraints that are weighing on PC shipments continuing into the first half of next year. It gave a stronger forecast, indicating market share gains, particularly in servers, despite tight supply. Let's get more on all of these tech results with Bloomberg's Laura Wright. So good morning, Laura. Why did Alphabet shares actually fall in post-market trading?
Hi, Francine. Well, the cloud business missed expectations. That unit is still loss-making. And on the earnings call, the CEO, Sundar Pichai, well, he still sees continued momentum because year-on-year revenue growth for the cloud business is over 40%. There was also downside with YouTube sales, missing estimates there, in part due to those iOS Apple privacy changes, which led to a miss on Facebook's earnings yesterday. But what is the real darling for Alphabet? It is advertising. And you can see here that advertising revenue has continued to grow year on year, quarter on quarter, culminating in this earnings at $53 billion US. And that is because of a surge in retail, media, and travel.
So, Laura, what were the key takeaways from Microsoft and Twitter?
Microsoft, it was a beat across the board. It's extraordinary, as my chart here shows. This green line identifies the threshold of double-digit earnings growth, and that has continued for 17 quarters. Yesterday, reporting 22% year-on-year revenue growth. And for the last 11 quarters, there has been a beat compared to the street's expectations. That is because of the intelligent cloud business, Azure tying up a lot of deals. But we did hear about a supply chain issue, as you referenced earlier, Francine, with Xboxes. Finally, Twitter, the metric that the market looks at is monetizable daily average users, coming in line with expectations at 211 million. And those privacy concerns that did affect Alphabet slightly were negligible for Twitter, Francine.
All right, Laura, thank you so much. Great work there from Laura Wright, sometimes also in the twilight in our shots. Now let's get back to Francesco Sandrini from Amundi, who's still with us. Francesco, what do you do with tech right now?
That's honestly a very good question. This is a market, according to what you said, is a perfect market for stock pickers, because we are talking about a sector that has a lot of clouds on top of it, because there is taxation, there is incoming regulation, there is pressure on the interest rates, there is sometimes excessive position, but there are earnings that are coming through that are extremely interesting at the same time. I think that we have to be very clear. Even when we talk about one of the aspects, trying to generalize, like the cloud computing, you see that the effect on different companies seems to be different. So there are a lot of distinguishes at the level of the single stock. My job, that is the one to try to be an asset allocator, is the one to try to find common patterns. I see that on one side, this is an earnings season that rewards relatively well all the companies that take their revenues from advertising, from cloud, tends to be punishing a little more those companies like Texas Instruments or IBM that instead are suffering a little more the bottlenecks, the supply issues, the physical computer provision like notebook. So I think that this is the common pattern. There is an area of the tech that is more impacted by the bottlenecks, by increasing cost. There is an area instead that is taking more benefits from the reopening trades and from the cloud computing, so the business.
Francesca, I don't know whether we want to talk about, political things in the U.S., but it's very clear that it's very difficult to get everyone on the same page to look at taxation. And it seems that the market is actually loving it. So if you see the rally in stocks, part of it is also, thanks to lack of faith of the markets that they think the president will not be able to push some of the corporate tax hikes. What if the market is wrong on this?
I think that the expectations on the market were quite low in a lot of these political discussions, because a lot of this was already on the table. You may think also to the reconciliation plan. Here we are touching specifically the issue of taxation. So these difficulties, in my opinion, are to some extent discounted. Of course, the market is cheering, because this means only one word: higher revenues for those corporations.
Francesco, thank you so much. Francesco Sandrini there, senior multi-asset strategist at Amundi, joining us, talking about the banks and, of course, talking about some of the things that we've seen, for example, in the technology stocks. If you look at what the market is focusing on, we have a lot of earnings. So if we just quickly break it down for you, we did have BASF coming in with a bit of better than expected forecast. Puma actually the same, raising its sales and profit forecast for the year. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. 3 key U.S. senators have released legislation that would require companies reporting more than $1 billion in profits to pay a minimum 15% tax rate, even if they qualify for lots of tax breaks. The proposers, including Elizabeth Warren, say the plan would raise $300 to $400 billion over 10 years. It would come as an alternative to increasing the regular corporate income tax rate from 21%. Now, a panel of U.S. experts says the benefits of a COVID-19 vaccine for young children exceeds its risks. The FDA Vaccines Advisory Committee voted 17-0 with 1 abstention to back the Pfizer-BioNTech jab for children between 5 and 11 years old. The sign-off sets a stage for a likely U.S. authorization in the coming days. Environmental group Greenpeace is calling on the European Union to ban short flights on routes where a train journey under 6 hours is available. More than a third of 150 busiest short-haul journeys have a viable rail alternative, including popular routes like Paris to Amsterdam, Madrid to Barcelona and Munich to Berlin. The group wants more government funding to improve rail infrastructure and make train travel even cheaper. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. We are all getting the train to COP. Now, coming up, it's budget day in the UK. Rishi Sunak prepares to deliver the government's spending priorities while dealing with a stuttering economy, high inflation and rising energy prices. We'll also focus on the Chancellor's challenges next. This is Bloomberg.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's budget day in the UK. Businesses are looking to Rishi Sunak to repair their strained relationship by doing more to spur investment and ease the tax burden. Well, the Chancellor's statement comes against a backdrop of an energy crisis, supply chain bottlenecks, and rising inflation. Well, joining us now at the very latest is Bloomberg's UK economy reporter, Lizzie Burden. Lizzie, good morning. So what are we actually expecting from Rishi Sunak today?
Well, Francine, we're not expecting a massively generous budget from Rishi Sunak today, and that's because of the inflation backdrop. He's not going to want to trigger an even more aggressive response from the Bank of England, which we know is likely likely to raise rates at the November meeting, according to markets, and that in turn would only drive up the cost of servicing the government debt. On the other hand, Rishi Sunak isn't going to want to choke off the economic recovery. As you can see from my next chart, we could face a winter of discontent in the UK, and that's because of the rising COVID cases. Other countries are still in boost mode. So how is he going to thread the needle? Well, we're expecting him to focus his budget on addressing this cost of living crisis by raising the national minimum wage, raising public sector pay, and at least continuing the freeze on fuel duty. But apart from those measures, unless there's a big rabbit out of the hat moment, as chancellors often give us in their budgets, we're not expecting any big spending announcements, maybe on universal credit, but we're expecting Sunak to focus his message on that he's a fiscally responsible Conservative, reining in the public finances and only unleashing spending in the run-up to the next election, which could come as late as 2024.
So, Lizzie, earlier this month, Boris Johnson also promised at the Conservative Party conference a high-skilled, high-wage, high-productivity economy, even with tax cuts. When are we likely to see that?
Well, Francine, it could take a very long time to see that. It's just not the time in the political cycle yet. As I say, Rishi Sunak's likely to want to rein in the public finances now and not dip into this shortfall that he got from the stronger than expected.
Okay, traders, let's have another chance to buy. We have another chance to buy euro, and I'm placing an order to buy at 116.0.41. Okay. Okay, order placed. 41, just right here. If you keep following my trades, okay, as you can see, position. No, not open yet. Many trades. Let's wait a little bit. Okay, position opened at 116.041. Okay, stay with me. We will guide you through this trade and we'll close this trade together. Okay, stay safe, guys.
Han profundizado el extractivismo en Argentina con más agronegocio, con más transgénicos, con más agrotóxicos, con más proyectos megamineros y ahora, como si fuese poco, han avanzado presentando un proyecto de ley que es la ley de hidrocarburos.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Deutsche Bank weathers a slowdown in trading, while James von Moltke says the bank is in a war for talent as it consolidates its recovery in European banking. Big tech posts mixed results. Cloud computing drives growth at Microsoft, but Robinhood plunges pre-market after missing on revenue. And U.S. Democrats propose new corporate tax legislation to make companies pay 15% on profits they report to shareholders. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 27th of October. Now, there is quite a lot going on in the markets. Again, a lot of earnings from all sorts of sectors, and some of them are a little bit of a mixed bag. So let me actually look at some of the direction overall. Stocks are actually really struggling amid this mixed earnings season. If you look at mining stocks, they're leading the retreat in the European stock 600. The price of raw materials, including aluminium and iron ore, are falling along with crude oil. And if you look at Germany's DAX, definitely underperforming after Europe's biggest economy actually cut its growth forecast, citing a lingering effect of the pandemic and supply squeeze. Then we have the banks, including Deutsche Bank and Banco Santander. So joining us to talk about the markets is our markets editor, Christine Aquino. Christine, great to have you on the program. When you look at some of the earnings, it's actually difficult to find a common direction.
Absolutely, Francine. And I think that is part of the struggle in stocks right now, especially in markets in general. You know, there's not one big narrative that's driving markets right now. And people are looking to idiosyncratic stories to kind of get their next cues, you know. And I think, you know, the problem, I think, with earnings season, as far as how investors are digesting it right now, is that there's not really that smoking gun, you know, in terms of, is this a good thing or a bad thing in terms of, you know, what it's saying about demand in the economy and how just the overall health of the market is doing. You know, it's very individual stories. Yeah. And so I think this is what we're seeing at the moment today. You know, it's a little bit of a mixed bag of earnings and a little bit of a trading rudderlessly in the markets at the moment.
So if you look at, for example, some of the big tech, I mean, look, a lot of them, you know, will be later today. They're released also after the U.S. session. And again, it's not really giving us a whole sense of what the general equities will do, because for that, I guess they look at taxes.
Yeah, absolutely. And, you know, so all of these things that you have to factor in, right? But I think, yeah, the tech story in general is going to be quite interesting, especially in this sort of environment of rising yields, right? Because, you know, these high growth sort of companies, they're usually very favored among investors until you get this move in the bond market where, you know, you're seeing a little bit of that yield rise. I mean, earlier this year, we had some strategists from Citi, for instance, forecasting underperformance in tech. If we get a certain level of yields in the U.S., I think it was 2%, if I recall correctly, you know. And so that kind of interplay is going to be very interesting moving forward. And I guess it just depends on whether investors see enough reason for these tech companies to kind of keep growing and to keep being a good value proposition, even in this sort of environment.
I have to say, Christine, one of the things that also caught my attention was a Citigroup note looking at some of the earnings per share forecasts, and they've had to cut them down because of some of the other things that's going on in the markets, which is why we're really also focusing on ECB tomorrow.
Absolutely, Francine. And, you know, I think that the general direction of policy for the ECB, for the big central banks, probably going to be very important because, again, you know, we've had a lot of CEOs this earnings season pointing to the future, right? And a little bit of uncertainty there. They're not really very outrightly saying, oh, it's going to be fine and it's a cracking future for demand. No, I think there've been there's been a bit of hesitancy, actually, to declare that it's going to be risk off and everything is fine from here. And so, you know, this is where policy comes in because that reaction function and how they're going to be reacting to some of these inflationary pressures that we're seeing, for instance, that's really weighing consumer sentiment, obviously going to be very important for demand and these companies' outlooks moving forward.
Christine, thank you so much. Our markets editor there, Christine Aquino. Now, DN Capital, an early-stage venture capital firm that invests invest primarily in Europe and North America, is looking to capitalize on the post-pandemic world through TMT investing. Now, DN was founded by former Advent partner Nenad Marovac in 2000. DN Capital focuses on investment opportunities in software, fintech, marketplaces, and consumer internet. Now, some of its most notable investment success stories include AutoOne, Mr. Specs, Shazam, and Purple Bricks. Well, we're delighted to be joined by Nenad Marovac today. Thank you so much for joining us. There is quite a lot going on. You've always had bets that, have paid off. What's the next big thing? Do you worry about valuations?
The valuations are clearly high, but I think the growth of the companies makes up for it. So, for instance, if you look at our company we invested in last year called GoStudent, the leading player in Europe in online tutoring. So this company has grown 70x in the last 12 months. In terms of valuation, 10 times in terms of growth of the business. So we're still optimistic that there's pockets, especially within tech, that still will give this kind of growth. And comparing to what Christine talked about, 2%, these are companies growing 1,000% per year. So I think we're still fine in the tech space.
So out of every success, how many do you have to invest in that actually won't play out? It's difficult to look at trends, also because the pandemic has kind of changed everything.
Sure. Well, we've been doing this for a long time, so I'm happy that we're getting better at this, but still, it's a startup world. We're taking a lot of risk. And so on the early stage companies, it can be anywhere from 25 to 50% loss rates, but obviously as the more mature companies, it's much lower. And so we kind of balance the portfolio with early stage as well as growth opportunities.
So, Nenad, what has the pandemic meant for you? Did you change the kind of companies that you were looking at because we will make business differently?
Absolutely.
Or does it just accelerate a trend?
So when the pandemic first hit, the first thing we did was triage the portfolio, obviously making sure all the companies were well funded. We thought, initially everyone thought this might be a 3-month blip. We thought we've actually forecasted for 3, 6, and 12. Obviously, we're in the 12 plus. And so thank God we were very conservative with our companies, making sure they had cash to get through it. Then the next thing we did was actually say, okay, where do we want to invest? And I think that what COVID has done is accelerated the shift in digital transformation within every industry. And so what we did is we decided we want to focus on the following areas. So software automation, digital payments, marketplace e-commerce, digital communications like the online tutoring, and then digital health. And the good thing is those are areas we've been investing in for the last 20 years. So we didn't have to change much. And that's worked out quite well for us.
I mean, you've had really some pretty incredible success stories. And what's interesting, if you look, for example, at Mr. Specs, that was an IPO. If you look at Shazam, you sold it to Apple. Purple Bricks IPO, OLX, you sold it to Naspers. So what's your preferred way when you find these companies? What's the best way to grow them, and what's your end game?
So, we try to find entrepreneurs that want to create big companies. So it's really getting involved with them and helping them to build their team, find partners, find them more capital. These companies are constantly requiring more cash. And so we really need entrepreneurs that have that ability to find a sector that really is big and where they can get traction. But also, these entrepreneurs have to be able to raise cash. Because these companies are constantly requiring more funds. And obviously, the IPO market this year has been fantastic for that. We took 4 companies public, AutoOne, Mr. Specs, Home2Go, Remitly, over $15 billion worth of enterprise value for investors, which is going back in the market and creating new companies. So it is a very positive circle that obviously is helping the European ecosystem quite a bit.
I feel like it hasn't been that difficult to fundraise just because of so much cheap money out there.
European venture capital has never been an easy asset class. It's getting better, but it still requires more investors to come into the asset class, especially European pension funds, et cetera. A lot of the money still comes from America and other places, even in European venture capital. So
what
it'd be nice
holds it
to
back?
see European institutional investors put some more money in the asset class, and I think the numbers will give them much more than the 2% Christina was talking about.
Yeah, but I mean, given where we are in terms of low rate environment, why has there not been? I guess it's just seen as much more risky.
I mean, it's a conservative mindset. I think the American LPs, the endowments, have been investing in venture for a long time. I mean, European venture is not as old, not as established as the U.S. market.
So what do you see here in the UK compared to the rest of Europe?
I mean, every country is different in terms of their skill sets. I mean, the UK is still one of the most important markets in Europe. I think Germany, which has started really only about 10, 11 years ago, has come up and is a very, very close number 2, possibly overtaking. Let's see. We're very bullish on Berlin. Also other cities like Madrid, Barcelona, Helsinki, Stockholm. Copenhagen, also seeing great companies come out of all these different markets. I think Europe, it used to be UK was the only game in town. Now I think other countries in Europe are playing a big role, even UiPath, which is...
But Nanad, is the UK actually losing because there's just less talent because of Brexit and other causes?
I don't want to get into political discussion. Obviously, Brexit's not good because engineers from Eastern Europe have a tough time coming here. They're going more to Berlin. But, you know, let's see what happens there.
Okay, let's see what happens. Nenad, thank you so much. Nenad Moravak, their founder and managing partner of DN Capital. Now, coming up, leading Democratic senators, including Elizabeth Warren, unveil a corporate minimum tax plan they say would raise $400 billion over 10 years. We'll look at those numbers next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Deutsche Bank's trading revenue dipped as it missed big gains in equities after exiting the business. But the CFO, James von Moltke, says a recent pickup in client trading helps the firm weather a slowdown in the key debt trading business slightly better than peers. Well, he spoke with our reporter, Maria Tadeo.
The current rate curve is already beginning to help the banking industry. So as we see rates go up, in our case, the current curve is worth about 150 million in revenue terms, more for us next year than we thought a year ago. So that's a help. And that rises to about 500 million euros in 2025. In fact, more than that, on the current curves. Should inflation rise further and rates move up further, more benefit from the banks. And that's very helpful after a long period of low and negative interest rates. Now, the economy, going to the front of your question, look, when we talk to clients, corporate clients, they see inflation in their supply chains, and they are looking for ways to pass through those inflationary pressures in their pricing. And we are seeing in the debate about how other things like wages would adjust to those pricing pressures feeding through. And so there is, of course, a risk that it isn't transitory.
You were able to attract a lot of money in there. It does seem that your target that you were hoping to get by 2023, you're far ahead of that, and all the targets will be met. So how much appetite is it from the investment community and the inflows that you're seeing, particularly on the ESG space?
The appetite is very strong. So in our asset manager, DWS, revenues were up 17%, assets under management up over 20 billion, and that reflected inflows of 12 billion, including 5 billion, to your point, in ESG. products, which is very strong, sort of record growth in that product area. On the Deutsche Bank side, we've been measuring sustainable financing towards a target that we'd set initially for 2025 of 200 billion. We brought that forward to 2023, and at this point, we're at 125 against that measure. So we see sort of growing appetite for these products and a growing acceptance in the market and increasing sort of product areas where green ESG sort of rules and taxonomies are in place and are working really well.
And what about fixed income? I mean, that's usually the unit that the people look at Deutsche Bank. You're competing with big U.S. banks. How are you going to stay competitive on that?
Absolutely.
It does seem the market is a little bit, perhaps, credit.
And there, I think we performed in line with the market, which again is good against what was an outperformance last year in fixed income. And it demonstrates that we're really consolidating our market shares. We've continued the progress, I think, since 2019, since we announced our transformation, our restructuring. We've focused the business on core areas where we could be competitive. And as we're seeing, the client engagement, the momentum, the progress in the business is really showing through.
That was the Deutsche Bank CFO, James von Moltke. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Delivery times for chips posted their smallest gain in about 9 months in October. The lead times, a gap between when a semiconductor is ordered and when it is delivered, increased by 1 day to just under 22 weeks compared with last month, according to research by Susquehanna Financial Group. The data suggests a chip shortage that has affected a broad range of industries may be starting to ease. Now, Heineken has reported a decline in beer consumption as Southeast Asian markets like Vietnam suffered from a resurgence of COVID-19 cases. Beer volume fell 5.1% on an organic basis, more than 3% drop expected by analysts. The world's second largest brewer said Asia was especially weak, with volume slumping 37%. And shares in U.S. sports betting giant DraftKings jumped after it decided not to pursue a $22 billion bid for British company Entain, owner of the Ladbrokes and Coral betting chains. DraftKings' offer of a cash and stock represented a 43% premium on the share price, but sources say it was unwilling to meet some of Entain's demands. And that's your Bloomberg Business Flash. Francine.
Leanne, the race is on, and now let's turn our attention further to the proposal by leading Democratic senators to impose a 15% minimum tax on bigger U.S. corporations in a bid to help finance President Biden's economic agenda. Now, for more, we're joined by Bloomberg's Kathleen Hunter. Kathleen, so if you pull it apart from us, you know, these aren't traditional tax increases, right?
That's right. And so there are already questions about whether or not there's going to be some legal questioning or legal challenges to what the Democrats are looking to propose. As you mentioned, that includes a 15% minimum tax on corporations, but the tax would be actually based on the profits they report to their shareholders, not on what they show to the IRS, the Internal Revenue Service, which is currently how it's structured. So that'd be a change in the structure of how the tax is administered. And then they're also talking about a tax on billionaires, which would go on unrealized gains in the value of their liquid assets. So not when they sell those assets, but as those assets appreciate every year. And so that would also be a change which could be subject to some legal challenges as well.
So how big of a breakthrough is this, Kathleen?
Well, it certainly is significant. I mean, these tax increases have been a stumbling block in these negotiations that we've seen for several weeks on Capitol Hill. Kirsten Sinema, who's a senator from Arizona, a Democratic senator from Arizona in particular, has been resistant to the idea of tax increases. And so I think part of the thinking here is that structuring these tax increases in an innovative way might be what it takes to bring her and Senator Joe Manchin and another moderate Democrat on board and get the votes that they need in the Senate.
So what are the potential political landmines here for the Democrats?
Well, there are a few. I mean, they certainly have very small margins in both the House and the Senate. We know that, these proposals are unlikely to get any, Republican support. So they only have a margin of 3 votes in the House. They're split 50-50 in the Senate, so they can't lose any single Democrat. So certainly there's still a lot of obstacles ahead. It's a very long road, but this is a significant breakthrough, and I think that there is a certain degree of momentum behind the idea of getting a bigger bill together. We know that, President Biden is heading overseas tomorrow for some meetings in Europe, and I think that the sense is that there's a hope that potentially by the time he's back next week, there could be an agreement and potentially even a vote on some kind of a broader package.
Kathleen, thank you so much. Our Kathleen Hunter there looking at U.S. politics. Now, coming up, the road to COP, big banks haven't quit fossil fuel. JP Morgan, Citigroup, and Bank of America are earning hefty fees from the oil, gas, and coal industries. So we analyze what that means as we head to Glasgow. That's coming up next, and this is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at you'd have to look at what was you're defining as strategic or critical.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. So as we approach the COP26, a focus firmly on getting to net zero. Big banks say they're committed to financing those goals, but they don't seem to be able to quit fossil fuels. Well, since the Paris Agreement in 2015, global banks have pumped almost $4 trillion into oil, gas, and coal. Well, that's against the $800 billion that went into green projects during the same period. Now, for more on this, our ESG editor, Tasneem Broger, joins us from Copenhagen. Tasneem, thank you so much for joining us. Why is it so hard for big banks to actually quit fossils?
Morning. Yeah, well, I mean, it's a lucrative business for them, and they've made about $17 billion from that $4 trillion that you mentioned. The banks themselves would argue that this is not something that can happen from one day to the next. They have long-standing relationships with a lot of these clients. They also make the point that there simply aren't enough renewables out there to pick up the slack. At the same time, and seeing for a significant sector like fossil fuels, it also will have unfortunate economic consequences, they point out. At the same time, climate activists and also an increasing number of shareholders make the point that the banks aren't moving fast enough. They don't have clear and measurable strategies of how they're going to get to net zero, and also of how they're going to reach goals in 2030, which is sort of the next milestone that the UN is keen for the industry to do. So that's where the focus is, and they seem to be wrong-footed by the shift in sentiment there.
Yeah, so Tasneem, how hard is it for financial institutions to actually define ESG or to have a common ground? Because otherwise you go into different directions and no one really knows what you're doing.
Yeah, I mean, that's exactly it, because the ESG sector, whatever you call it, is sort of this amorphous thing that's grown rapidly with regulators sort of not really at the wheel. It's estimated to be more than 50 trillion by 2025, which is like a third of total global assets. This year, the European Union enforced essentially an anti-greenwashing rule book called the Sustainable Finance Disclosure Regulation, which is really sort of changing the scene here in Europe, and also to an extent for international asset managers who have clients in Europe. And we can see that that's already starting to have consequences, like with DWS, the asset manager of Deutsche Bank. They're being investigated in the US and in Germany after whistleblowers said their ESG claims are not necessarily credible. DWS has obviously vehemently rejected those claims, but questions remain.
So, Tasnim, if we try and follow the money, what does Al Gore's fund aiming to do with Goldman Sachs?
Yeah, so that's a really interesting thing that they're doing. They've got a lot of backers, a lot of big backers, including Goldman. The point they're making is that ESG was necessary. It was a good step, but it hasn't got us to where we need to be in terms of reining in emissions and also keeping temperature rises in check. So what they're saying is it needs to be an impact strategy. It needs to be a climate impact strategy that moves to markets that have been underinvested, like private markets, and also industry, so steel and cement, and a lot of emerging markets as well. And that, they say, is the best way to rapidly decarbonize the economy so that we have a fighting chance of getting to the goals that the UN has set out for us.
Tasnim, thank you so much. Our Tasnim Broger, there, our ESG editor in Copenhagen. Now, ahead of COP26, also U.S. Special Presidential Envoy for Climate, John Kerry, joined us for an in-depth conversation on the challenges of climate change diplomacy and the chances of a breakthrough. So you can catch that full conversation on Leaders with Laqua tonight, 9:30 p.m. if you're in the U.S., tomorrow, 7:30 p.m. UK time if you're watching in Europe. In the meantime, the rally in European stocks seem to be fading away. We had a mixed earnings report, a decline in commodity prices, and renewed concerns about the region's economy. Well, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards in London, Matt Miller out of Berlin, Kaylee Lyons in New York. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
From New York City,
We're in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I sure do think that there's a high probability that's going to happen. The president needs to take something with it by the end of the week.
If it raises productivity and creates equal opportunity, that we can't just talk about the raising of money, we have to talk about the usage of money and how that's employed.
I'm not even sure where that money is well spent now. I think this is one of the issues today. But I would agree with everybody. If we could find solutions where the money can be directed in a proper way.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Wednesday, October 27th, our top stories today. Democrats unveil a corporate minimum tax. They're hoping it will help pay for President Biden's economic agenda. Big news from big tech. Google's sales boost Alphabet, but the stock is dragged down by YouTube and cloud computing. Microsoft beats estimates again, and Twitter brushes off Apple's new data rules. And Deutsche Bank's debt traders hold up in the midst of an industry-wide slump, but they need more help perhaps from the rest of the investment bank. Good morning, I'm Anna Edwards with Tom McKenzie in London and Kaylee Lines over in New York. Matt Miller is off today. And Kaylee, we have European equity markets weighed down by the banking sector, the miners, but over in the United States, things much more focused on the tech earnings season.
Yeah, and that's leading to a little bit more positivity in the future session here in the U.S., but there wasn't that much positivity evident in the Asian session. Most stocks were lower, most currencies weaker against the dollar as well, and we saw a pretty sharp sell-off in bonds in certain areas. I'll have more on that in just a second. But back to the equity action, China and Hong Kong down 1.3 and 1.7% respectively, really dragged lower by technology. The Hang Seng Tech Index down more than 3 full percentage points, and that is after the FCC here in the U.S. ordered China Telecom to stop operating its U.S. business. So that raises some concern about scrutiny from Washington for the sector, let alone scrutiny from Beijing. Now, the other story out of the Asia Pacific overnight was Australian inflation, which actually rose to the central bank's target. And that is reinforcing ideas that tightening is going to have to come to a larger degree and more quickly than maybe expected. So as a result, the Australian 3-year yield climbed 16 basis points. At one point, it actually breached 1%, ended the day around 93 basis points. The Australian dollar also was a big outperformer in the G10 space. Right now, though, it has flipped back to weakness against the U.S. dollar by about 0.2%. And you saw some follow through in New Zealand yields as well. The 5-year there up about 13 basis points. Now, here in the U.S., as Anna said, it's really all about earnings this week, and big tech earnings especially. A bit of a mixed bag with the reports overnight, but nonetheless, NASDAQ 100 futures leading the way in early hours. Right now, though, they have actually flipped into negative territory. So we are seeing a bit of a turnaround with about 4.5 hours to go until the opening bell. In the bond market, yields coming in a touch. We sit just shy of 160 on the 10-year. Oil coming in as well after closing at its highest since 2014. We're at 83.24 on WTI. And Bitcoin coming down too, Tom. It's down the better part of 5%. We have breached $60,000.
I'll pick up then, Kaylee. Yeah, really interesting
Anna,
to see
so
those
sorry.
moves. That's okay. Interesting to see those moves on futures then stateside. Perhaps a little bit of the negativity we're seeing here on the European session just seeping into that psychology ahead of the session over in New York. So the European equity session being weighed down by the banking sector, weighed down by minus, some of those base metals pulling us lower. The earnings season for the banking sector certainly not going as some management would anticipate or would have wanted on day one, and we see some of those banks moving to the downside. Let's flip through and show you some of the individual movers, and this just highlights at least one of the banking stories that we're dealing with. A bit of a heavyweight over on the German market. Deutsche Bank down by 5.3%, which is interesting when you think they've beaten on a number of measures, and even the 12% drop we saw in fixed income revenues didn't look all that bad compared to estimates, but maybe the estimates within the market, maybe expectations in the market had been reset by really strong numbers coming out from some of the US majors in terms of the banking season. So that's what we're hearing, is resetting expectations a little bit there, and they don't have that offset from equities that some of the other businesses have. Heineken down by 1.3%. The drinks business, beer volumes lower than estimate, and this is a really interesting story for the consumer sector, for those who operate in the hospitality industry. The Asia COVID story is certainly not over. That is the message you take through from those Heineken numbers. And Puma, I put this one in here as well. The athleisure trend, of course, still benefiting these businesses, up by 2.2%. They've increased their guidance. They're managing to overcome some of the supply chain issues that other businesses have faced. But interestingly enough, they're saying buy your Christmas presents now, get ready for the holiday season early because of those supply chain concerns. Kaylee, that is a level of organization I can only aspire to.
Well, and that's what we're hearing out of a lot of retailers. If you don't want your Christmas presents stuck on a ship, you better buy them now. Let's get over to Washington now, because we do have some breaking news. General Mark Milley, the chairman of the Joint Chiefs of Staff, says China is the greatest geopolitical threat to the United States, and he's calling China's suspected test of a hypersonic weapon system a, quote, very concerning development in the escalating competition between Washington and Beijing. General Milley spoke on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system, and it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from our D.C. bureau. So, Anne-Marie, obviously the U.S. and China are adversaries. There's contention on issues like Taiwan, and at the same time, they have to be able to cooperate on climate, especially as we head into COP26. Where does the Biden administration stand in its China policy right now?
It's a great question in terms of this is probably one of the biggest foreign policy issues facing the Biden administration, because as you say, Kaylee, they really want to make sure they can get China on board and work with climate and other initiatives similar to the Obama administration, this bucket diplomacy, work with China where you can, but be an adversary where potentially it shows a controversy against the United States. What we're hearing from General Milley is that he is talking about the fact that the next 10, 20, 25 years, he is cementing that this is obviously for him and the military apparatus here in the United States, the biggest geostrategic, this is what he is calling it, challenge to the U.S. going on in China. And it comes on the heels, you mentioned Taiwan, of yesterday, we heard from Secretary of State Blinken talking about the fact that other countries should support the U.S. in trying to get Taiwan to have more of a say at the United Nations. That we have already seen China's foreign ministry come out overnight saying that goes against the one China policy. And also on the heels of what the president said about Taiwan at the town hall. Now, the White House came out and said there's no change in policy, but he said that, yes, the U.S. has a responsibility to stand up to China and back Taiwan. This is one of the most volatile issues facing the U.S., and we should note that is also one of those issues that we really don't see a change in policy from the Biden administration, from the Trump administration. This hard talk on China, that has bipartisan support.
Yeah, and that perhaps surprising some observers. Good morning from London, Anne-Marie. Let's stick with things that are sort of getting in the way of the Democratic agenda right now. David Rubenstein also spoke with the Democratic Senator Joe Manchin of West Virginia. Senator Joe Manchin struck an optimistic tune about President Biden's economic agenda. Let's listen.
I sure do think there's a high probability that's going to happen. And I think that basically this infrastructure bill, we'll call it the BIF, the BIF bill we all refer to as the bipartisan infrastructure bill. But the BIF bill I think, and Debbie would be able to tell me better than anybody here, I would like to hope it passes Wednesday evening. The president needs to take something with it by the end of the week.
So they are still talking. Perhaps that's good news for anybody who wants to see that pass, or indeed for risk assets if they are focused on the development of that Biden administration package. Let me ask you about how we pay for all of this, though, Anne-Marie, because we've had a host of headlines around taxation. We talked in our headlines about corporate minimum tax. I see another line across the Bloomberg this morning saying Democrats are unveiling a billionaire's tax to do with capital gains. What's the latest on this?
So we're just getting details of that billionaire tax. We've been waiting for this tax, and it's a scoop from Laura Davison. And what we were hearing is that they would require billionaires to pay 23.8% annually on unrealized gains. So this is not their income. These are things like stocks, bonds, also potentially real estate and other businesses, things that potentially is hard for the IRS to get their hands on. Now, the problem is this could be an issue with some members of the Democratic Party. Potentially it will not have the full support. But there's already questions, especially coming from the chair of the House Ways and Means, Richard Neal, saying this could potentially face issues in court. What might be able to get a green light forward for the Democrats, we already saw on Twitter last night, Senator Sinema's on board of, is the 15% minimum corporate tax. So this is potentially something that one way they could pay for it. But even then, that will bring in about $400 billion. They're talking about spending at least $1.5 trillion. And then quickly, if we could just talk about the time frame, Senator Manchin would love to see that vote on bipartisan infrastructure, the hard infrastructure. The progressives are saying a framework is not enough. They want to see both of these bills voted on together, not just a framework. So what he is saying that potentially this could take weeks or months.
The importance of the time frame there. Bloomberg's Anne-Marie Holden, our DC Washington correspondent, of course, on these tax policy changes and announcements, and of course this incremental movement to getting some of these spending bills across the line in DC. We'll have much more from David Rubenstein's interview with General Mark Milley later this hour. You can also catch the full conversation on the David Rubenstein Show peer-to-peer conversations. That's tonight, 9 p.m. in New York. Okay, European nations continue to dominate the top of Bloomberg's COVID resilience ranking this month. Ireland remains in #1 position. That's even as cases rise. Let's get more on this with Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, just give us a lineup of where things stand. Southeast Asia is still doing very badly in terms of its handling of COVID-19. European nations, Ireland at the top, how are they different in terms of their approach?
Hi, good morning. So I think one of the critical things to remember is the type of vaccine that's being used in the different regions. There are so many moving parts in this when it comes to a response to the pandemic, and especially the Delta virus, because the Delta variant, because it is so infectious. And I think that makes a huge difference in people trying to manage the pandemic, and I bet you that it will be a constantly shifting dynamic when it comes to who's leading, who's not leading.
Yeah.
The real simple way of keeping it that day is to just keep people away from each other.
Well, Sam, here in the U.S., we of course also got news overnight that the FDA advisory panel has recommended the Pfizer vaccine for children ages 5 through 11. What would vaccinating that portion of the population mean for the effort toward herd immunity and ending the pandemic?
Yeah, so I think children do have their own risk of COVID, and clearly you can see that in the hospitalization rates and some other aspects of the number of cases, etc. But of course, it's a far, far lower risk than adults have. So the question really ends up, and it was a unanimous vote. It was 17 yeses and 1 abstention. There was lots of discussion, however, as regards to the safety of this, because you're going to have to really be at a time where there's lots of transmission of virus going on for it to make sense for that age group to be vaccinated for their own sake. But clearly, it makes a difference if they are protected, and the vaccine reduces transmission, which is a tough one with Delta, for the total society impact.
Okay, so potentially weeks away from 5-year-olds and up in the US being vaccinated. Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Thank you very much indeed. In earnings news, Deutsche Bank posted third quarter revenue and net income that were just above what analysts had expected as it set aside less money for bad loans. CFO James von Moltke spoke to Bloomberg's Maria Tadeo earlier.
Market conditions were more muted in the third quarter, so volatility was relatively low, but client engagement was high and actually increased as the quarter went on. So there is activity out there as clients hedge, as they position for what is in fact a changing environment out there.
Let's get more on this with Bloomberg's Laura Wright. So Laura, you heard what von Moltke had to say there. Give us the highlights from this report.
Hi, Katie. Well, there was a pickup in client activity and Deutsche Bank was able to hold on to those market share gains that they have made in fixed income. Finally, they were able to return more funds to shareholders. I actually spoke with Filippo Alauotti, who is head of financials at Hermes Investment Managers earlier. He gave me his take on the results, stating the equity market was expecting a bit more visibility in terms of capital returns. Secondly, the fact that profitability return on tangible equity was only 7%, but the target for 2022 is 9%. So it's really about how is Deutsche Bank going to make up that gap? Is it via revenue or is it going to be via cost cutting? The latter, Deutsche Bank has actually been quite successful at.
Yeah, really interesting set of numbers then coming through from a business that maybe has seen expectations on the street rise after competitors reported results. Let's think about the earnings season and what we learned from the tech story overnight then, Laura. I see that futures on the NASDAQ actually deteriorating just over the last hour or two. What were the key takeaways from some of those giants of the tech scene?
Well, for Alphabet, the market was focused on the miss with the cloud business, came in under expectations. That unit is still loss-making, we learned on the earnings call. The CEO, Sundar Pichai, he still sees continued momentum. There was also downside with YouTube, which missed sales. But the real darling for Alphabet, and it is advertising revenue. You can see here quarter-on-quarter, year-on-year revenue growth culminating in $53 billion for this quarter. And if we switch up the board and have a discussion about Microsoft, it was extraordinary what we've seen. This green line here identifies a 10% threshold. So what we have seen over the last 17 consecutive quarters is double-digit growth from Microsoft, coming in yesterday at 22% year-on-year. Finally, Twitter, that came in line with expectations. You can see pre-market trading here. Twitter is up over 2%. The key metric that the market was looking at for Twitter is monetizable daily average users, and that landed at 211 million.
All right, thank you so much to Bloomberg's Laura Wright. And for all of our listeners on London DAB Digital, you can see a lot of those great charts on your Bloomberg terminal. Now let's take a look at some other stocks moving on the back of earnings and pre-market trading here in the U.S. One big mover to the downside is Robinhood. Shares plunging 11% in early hours after a revenue miss. That was in large part thanks to the fact that crypto revenue was down 78% from the second quarter. So those shares are trading around $35, which is below the IPO price of $38. Another stock moving to the downside on earnings is Texas Instruments. Really just their forecast was in line, and that doesn't do much to ease investor concerns about slowing demand. So as a result, those shares down about 3.7%. One mover to the upside, though, is Xilinx, and this isn't on its own earnings. It's actually AMD's earnings that were after the bell. Within that earnings release, it said that its deal for Xilinx, $35 billion, is set to close by the end of the year. So that is lifting Xilinx shares by about 1.25% before the bell, Anna.
Yeah, some of the commentary around Texas Instruments affecting some of the chip makers here in Europe as well. Now, coming up here on this programme, it is UK Budget Day. Chancellor of the Exchequer, Rishi Sunak, is facing pressure to boost spending just as inflation tensions are rising. Plus, we'll discuss the state of crypto regulation with Brad Garlinghouse, the CEO of the payments company Ripple. This is Bloomberg.
agent number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of the ESG of the past, but we actually take the environmental, the climate, the social worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
This is Bloomberg Surveillance Early Edition. I'm Caitlin Lyons in New York with Anna Edwards and Tom McKenzie in London. Matt Miller is off today. Well, Anna, Tom, I don't know about you guys, but I'm feeling pretty chill on this Wednesday morning, and the equity market is feeling quite chill as well. The best way to look at that is to look at volatility. I have a great chart here for our listeners on London DAB Digital Radio. It's really quite simple. On one panel, I have the VIX, often called the equity market fear gauge, and on the bottom panel, the VVIX, which is essentially expected volatility for the VIX. We had a huge spike up at peak pandemic fear in March of 2020. The VIX hit an 80 handle. That has gone ever lower, and right now we're hanging out around 15, right around the lowest level since all the way back in February of 2020. The question is, can volatility stay this low? And joining us now to hopefully answer that is Christine Aquino, who helps lead Bloomberg's market coverage. So Christine, can the equity market stay this calm into year end?
Well, Kaylee, that is the big question, isn't it? I mean, if you're an equity bull, this is a great environment, especially because, the stock market, the S&P 500 is trading right around its all-time highs again. You have growth companies like Tesla reaching that 1 trillion market cap, and everything seems hunky-dory as far as earnings are concerned. There's not really been kind of any big sweeping bad news from the earnings season so far. And so, equity bulls, this is kind of the perfect environment to kind of cruise through the end of the year. But, my background is in bonds, and those that crowd tends to be a little bit more bearish. It also, this is sort of the environment where, you start kind of getting questions again of, are we in a bubble, and is it about to burst, because it can't go on for much longer. And, we're starting to hear some signs of that. I was reading with much interest our colleague John Arthur's column this morning, talking all about timing the bubbles once again. And, there's probably we're likely to see some semblance of that discussion heading into year end, given our current environment here.
Christine, thanks very much. Bloomberg's Christine Aquino joining us there from the Markets Live team. Remember, you can get market analysis from MLIV Go on your terminal. This is Bloomberg.
the energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic, and there are a handful of things going on. I think all over the world, there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenge is with getting people back into the workforce.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards here in London, Kaylee Lyons in New York. Matt Miller is off. Let's get the first word news now. China slamming US efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. Secretary of State Antony Blinken has called on other countries to join the US in pushing to give Taiwan a greater role at the UN. And in the UK, Chancellor of the Exchequer, Rishi Sunak, is likely to save most of the extra proceeds from a record rebound in economic growth. Sunak delivers his annual budget today. Output has recovered more than budget officials anticipated in their last outlook in March. That will allow Sunak to deliver what's likely to be the biggest upgrade in 4 decades of forecasting. And it's another blockbuster deal involving Hertz and Tesla. Uber drivers in the US will be able to offer services with Tesla electric vehicles rented from Hertz starting next week. Hertz will supply up to 50,000 Teslas to drivers for the ride-hailing giant by 2023. Earlier this week, Hertz ordered 100,000 cars from Tesla, propelling the stock price even higher. Plenty more ahead. Stay with us. This is Bloomberg.
опасный участок, ответственный. Рустам поднимает тебя на жумаре. Шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим вот этим поступком я хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom Mackenzie in London. Kaylee Lines with us in New York. Matt Miller is off today. And Tom, just taking a look at what we have for the Stock 600, the European session in front of us, a little bit lackluster. Difficult for European stocks to make headway, make progress when US futures are either flat or negative. And when we have the banking sector acting as such a drag, such a weight on these markets.
So both basic resources and banking. So basic resources down almost 2% on the back. And I look at GMN, you're looking at the likes of WTI, Brent, of course, steel prices all coming off. You have to wonder, though, given the longer term trends, if this isn't something of a buying opportunity within the basic resources space. But banking as well, Deutsche Bank, investors not overly pleased by what they've seen, despite them holding their guidance for the year.
Absolutely, and even Santander, where they increased their guidance, that stock trading weaker for the banking sector. Not a great day. Utilities, the best gaining sector here in Europe. And heading towards the US session then, Kaylee, there does seem to be this focus on tech earnings, but we're not far from recent highs, are we? Certainly on the S&P.
Yeah, we aren't, Anna, and I'm really struggling this morning to understand whether it is the weakness in the European session that has started to drag on U.S. futures, or if it was U.S. futures rolling over that started to drag European stocks lower, because the charts basically move in tandem. Right now, as you guys were talking about, basic resources, energy, bank stocks, all leading the stock 600 lower. It's down about 1/3 of 1%. And at the moment, NASDAQ 100 futures are in positive territory, but just barely, essentially flat after being up as much as 0.3% earlier. I'll get through more of those big tech earnings in just a moment. In the bond market, we are seeing yields coming in. We're down the better part of 2 basis points on the 10-year Treasury yield, south of 160 at 159.22. And you're seeing oil coming in as well. WTI crude closed above an 84 handle yesterday. This morning, though, futures down 1.7%. We're at 83.19. Back to those big tech movers, though. Of course, you had a number of mega caps reporting after the bell yesterday. For Microsoft, it was a positive story. Cloud computing leading to the 11th consecutive quarter of top and bottom line beats. That stock is up 2.3%. Cloud, though, was a bit of a downside surprise for Alphabet. YouTube also disappointed, so that it may be weighing a bit on shares. They're unchanged right now in pre-market trading. Twitter is not really struggling from the Apple rule changes that a lot of other digital advertisers warned about. It is up 1.9%, but plunging to the downside is Robinhood. Revenue coming up short of expectations, thanks in large part to a 78% decline in crypto revenue from the second quarter. So that stock is down 11% before the bell, Anna.
Okay, so that's the focus over in the United States before the bell. Here in the UK, we're focused on budget day. Businesses are looking to Chancellor Rishi Sunak to spur investment and ease the tax burden. The Chancellor's statement comes against a backdrop of an energy crisis, supply chain bottlenecks and rising inflation. They're not necessarily restricted just to the UK, those factors, but certainly in the mix today. Let's talk to Liz Martins, HSBC senior economist, who is with us this morning. Liz, really good to get your take. And it seems as if he's going to get a gift, the Chancellor, in the shape of a better forecast from the Office of Budget Responsibility that sort of sets the fiscal possibilities here in a sense. But whether he's actually going to use any of that is another question. What are you expecting to hear?
Absolutely. So first of all, you're right. The Office of Budget Responsibility is going to give him that gift, higher growth forecasts, lower borrowing forecasts before he does anything with policy, which is a very fortunate position for him to be in, given what you've just said, that we are going into this situation with higher inflation, interest rates, and other, supply side concerns. What's he going to do with that? Well, I suspect this time round he's going to bank a lot of it. He's going to announce some new fiscal rules which say, we want to close the current budget deficit, so day-to-day spending, only borrowing to invest, start to reduce the debt, which of course shot up by 20 percentage points over the course of the pandemic. And he has said at the Conservative Party conference quite recently that racking up additional borrowing now is immoral, which is quite a strong word to use. So I think, we've heard about a lot of the policies that we will be seeing today, but nothing, no massive giveaways, I think.
Okay, so he thinks the debts can be immoral, Liz, which was an interesting word he chose, flexing his fiscal conservative muscles. Also, I suppose, has a monetary policy perhaps consideration when it comes to inflation. A lot of people talking about inflationary pressures in the United Kingdom right now. The Bank of England is a finely balanced decision in November as to whether to increase interest rates. Is there a sense that the government doesn't want to stimulate the economy, actually, and provoke inflation going higher?
Yeah, I think that probably plays into it a little bit, as well as the need to get the debt down and the deficit down. But it is interesting that the UK is taking this position where, having provided very generous monetary and fiscal support in the pandemic, we're now withdrawing both. And that does put the UK in a relatively unusual position. Other countries are taking a much more cautious approach, really want to see the recovery take hold and take root much more deeply before withdrawing that support. In the UK, we are seeing it withdrawn on both sides.
Liz, we've talked about, Anna mentioned the finely balanced decision for the Bank of England next week, November the 4th. You are non-consensus, though, you and the team at HSBC, in viewing potentially the bank holding off and staying pat on this decision. What would underpin that view?
Yeah, I'm glad you said potentially. Look, this is very finely balanced. It is, we totally recognise why the market is pricing in a rise in November. We recognise why many of our colleagues are forecasting that. We're just not sure on the evidence we've heard from the Bank of England how much urgency is really out there. What they told us in September is they wanted to wait and see. They wanted to wait and see what was the impact primarily of the end of the furlough scheme, but other support from the government has also been withdrawn. They may want to wait and see whether we're going to have a damaging winter wave of COVID-19. If they go in November, they're going well. They're still doing QE, essentially, so that they've got the foot on the accelerator and the brake at the same time. Now, we've heard all the comments from Andrew Bailey and the rest of the Monetary Policy Committee. They are telling us that rates are going to go up, and we absolutely agree with that. We've been forecasting a rate rise since June. We just aren't hearing the same level of urgency as perhaps some of our colleagues are in what the members have actually said.
Well, if they do next week move toward tightening policy and we do actually get that rate hike and you're having fiscal and monetary tightening at the same time, does that risk throwing cold water on the UK recovery and killing momentum?
Yeah, I think to some degree it does. That's what monetary policy is designed to do. We know we've taken a big supply level hit to the economy. The Bank of England can't do anything about that. What they can do is try to moderate demand such that it isn't generating inflation pressures 2 to 3 years out. But, it is a very fine balance of making sure you're not going too far. And I think one of the things the Bank of England might say next week is actually the market has gone too far in saying they're going to get rates all the way to 1%, which is higher than where we were pre-pandemic within a year. That seems like quite a lot to me, and perhaps a bit too much for an economy that, after all, hasn't even got back to where it was pre-pandemic, let alone further. So I think that's possibly something they're going to comment on.
Liz, what is the data telling you and the team about the strength of the consumer here in the UK? That all-important retail sales number and the consumption within this economy and how that can hold up amid these pressures?
Look, demand should be supported by all the saved money, what we saved during the pandemic, the fact that employment is much stronger than anyone expected, the fact that wages are going up. But against that, there is a consumer squeeze going on from inflation, from the withdrawal of government support for those relying on universal credit. And there's a tax rise coming as well, isn't there, in April? And that's why we've seen some big drops in consumer confidence in the last couple of readings. I think it's 4 points in October, 5 points in September. And no wonder when you open any paper or watch any news briefing, they're telling us your energy bill's going up. We've got tax rises coming. So consumer demand, I think, is a little bit finely balanced as well.
Okay, just adding to that then, Liz, I saw companies from chemicals to white goods manufacturers talking about their pricing power just this morning, sort of adding to that list of factors that the consumer needs to consider. Liz Martins, HSBC senior economist. Coming up next on the program, we'll discuss the state of crypto regulation with Brad Garlinghouse, the CEO of the payments company Ripple. That conversation next. This is Bloomberg.
And click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Good morning. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie with Anna Edwards here in London. Kayleigh Lyons is in New York. Matt Miller is off. Okay, in its attempt to streamline cross-border payments, Ripple is using crypto to cut down on costs through a new product called on-demand liquidity. Our Yusuf Gamaluddin joins us now from Riyadh with the company's CEO. Yusuf.
Yeah, Tom, I mean, we are cutting through a very busy schedule here in downtown Riyadh, but it is all about some of these new innovations, and the peer-to-peer powered cryptocurrency Ripple is part of that bigger conversation that we're about to have with the CEO who joins us here. Of course, that is Brad Garlinghouse. Thanks for coming on the show, Brad.
Thrilled to be here. Thank you for having me.
The turnout here is just nothing short of astounding. What kind of conversations have you had? What kind of deals have you been able to sign?
Well, I totally agree. The energy here, the entrepreneurial energy, particularly in a, maybe almost a post-COVID world. So we've had amazing engagement here at FII with existing customers, with potential customers. And it's really just been a profound experience for me so far.
So what additional momentum have you been able to build into the Ripple growth story? Have you been able to come to any new agreements? Because a lot of the cross-border payments, the big channels come through this part of the world.
It's really true. I mean, this is a major centerpiece of remittance networks, and certainly the immigrant populations here in the Middle East, and certainly here in the Kingdom, between India, Pakistan, the Philippines. And so, these have always been populations which pay very high fees for their remittance traffic. And what we're focused on is bringing those down. The Middle East has been one of our fastest growing regions. We've grown network activity for Ripple-enabled payments 5x year on year here in the Middle East. It's our fastest growing region. And I think it really is only just getting started because it is such a center point, as you described.
What stood out to you in the last couple of months in terms of the adoption of some of the cryptocurrencies? We've had a pretty impressive rally in Bitcoin again, but it's kind of trickled through the wider crypto space. What would you take away from that?
Well, I take a macro long-term view. It's very clear that where we've started maybe almost 10 years ago with crypto really being a fringe and edge case, and where it's now become mainstream. The number of people who are holding crypto globally continues to grow very, very quickly. And the believers in how we can use these technologies for real benefit, not for just the speculative dynamics associated with those who may speculate as investors, what have you. But really, as Ripple is using, these technologies can dramatically improve the efficiency of things like cross-border payments. And those today can be very inefficient by speed and cost, and we can make them real-time and very inexpensive.
How does that fit in with some of the goals that have been announced at FII around net zero for Saudi Arabia? It's going to be 2060. There have been concerns about energy usage with some of the cryptocurrencies. Run me through what the thinking is at Ripple.
Well, for Ripple, that is also kind of the heart of how we think about success. One of the things that has helped XRP, the digital asset that's native to our technology stack, is it's extremely energy efficient. While I'm a believer in crypto at large, I'm certainly a believer in Bitcoin, the energy consumption associated with Bitcoin is profoundly bad. It's 120 terawatts. This is equivalent to the total energy production or consumption of the country of Argentina. So, I do think it's something that we have to address and solve and be cognizant of. One of the things that has been very good for Ripple's direction of travel, and certainly our momentum going into 2022, has been the fact that XRP is about almost 1 million times more energy efficient than a Bitcoin transaction.
What about regulation? What are you hearing? Could that come quite soon, would you say?
Well, again, I think if you step back and look at a macro level, the direction of travel for regulation globally has been very positive for crypto. I've been in this industry about 7 years, and if you had told me 7 years ago that you'd have countries like the UAE here in the Middle East, but certainly Switzerland and the UK, Japan, Singapore, these are all leading G20 markets that have clear regulations around crypto, and it's allowing the industry to thrive in those markets, and you're seeing more growth. And I think you're going to continue to see that going into 2022.
Would have fallen behind then in your assessment? A lot of catching up to do.
Without question. Surprisingly, given where so much of the entrepreneurial activity in crypto has been U.S.-based, the U.S. has kind of been a laggard in crypto regulation. There hasn't been a level of clarity that the U.S. did enable in enabling the internet growth in the late 90s. And so I think we're still hoping for that. And I think actually you'll see progress over the next 12 to 18 months in the United States that should help. And you're seeing more of a call to action from Congress to act.
One of the fronts that you've opened is a new fund that aims to help creators around NFT, $250 million worth. Which marketplaces are you going to partner up with?
Well, certainly we think of NFTs as a major expansion and opportunity around crypto broadly. Enabling whether it's artists, musicians, but even other industry enablement. On the stage earlier today, one of my fellow panelists, a guy named Mike Novogratz, was talking about the use of NFTs to actually manage your health records. The point there is really that NFTs, I think, can be an element of how we manage data rights, and artists obviously love it because they can take out some of that middleman and go direct to consumers. I think we're just getting started. Over the next 5 years, the expansion of NFTs is going to bring more people into crypto at large, and you're going to see the market grow dramatically.
Brad, terrific catching up. Thank you for stopping by. That is Brad Garlinghouse, the CEO. Ripple. Tom, Anna?
Thanks very much. Thanks to Yusuf Gameldin, and also thanks to Ripple CEO Brad Garlinghouse for stopping by with Yusuf at that conference over in Riyadh. Coming up on this program, almost a Sputnik moment then, why General Mark Milley is calling China the greatest threat to the United States. Part of that conversation next. This is Bloomberg.
His top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Kaylee Lyons in New York. Now, turning back to Washington, General Mark Milley, chairman of the Joint Chiefs of Staff, says China is the greatest geopolitical threat to the United States. He discusses American security on the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations.
I think it's China, and I've said that publicly many times. I think as we look to the future, and I think we are living in a historical epoch, actually, where we're seeing the rise of a country that is unlike something we've seen probably ever before. And it's one of the great historical pivot points, I think, that we've ever witnessed, which is the rise of China. And from the reforms of 1979 and Deng Xiaoping up till today, which is, I guess that's what, 41, 42 years or so, 4 decades, they've had an incredible economic run, and with that, they've developed a military that's really significant. As we go forward over the next 10, 20, 25 years, there's no question in my mind that the biggest geostrategic challenge to the United States is going to be China. That I have no doubt at all. Russia's important, not unimportant at all. Russia has very significant military capabilities. North Korea, Iran is still there. terrorists are going to be around for quite a while. But I think China is clearly the most significant geostrategic threat we face.
As we talk today, there have recently been some reports that the Chinese have a hypersonic missile that can theoretically go into space and then come down with a nuclear bomb, escaping our ability to knock it down. Is that something I should be worried about, or all Americans should be worried about?
Well, what you saw, and I don't want to get too much into the classification of what we saw, but what we saw was a very significant event of a test of a hypersonic weapon system, and it is very concerning. I think I saw in some of the newspapers they used the term Sputnik moment. I don't know if it's quite a Sputnik moment, but I think it's very close to that. So it's a very significant technological event that occurred, or test that occurred by the Chinese, and it has all of our attention, and we're paying it. But that's just one weapon system. The Chinese military capabilities are much greater than that. They're expanding rapidly in space, in cyber, and then in the traditional domains of land, sea, and air. And they have gone from a peasant-based infantry army that was very, very large in 1979 to a very capable military that covers all the domains and has global ambitions. So China is very significant on our horizon.
But can I presume that the United States has thought of doing a hypersonic missile as well, and that we are not caught completely flat-footed in our ability to maybe produce something like that ourselves?
We are clearly experimenting and testing and developing technologies to include hypersonics, artificial intelligence, robotics, and a whole wide range. Now, if you take a step back, what we're in history-wise, is we're in one of the most significant changes in what I call the character of war. But today, with the introduction of precision munitions, the ability to see all over the world, artificial intelligence, robotics, hypersonics, all of these things together, this is an enormous change in the character of war, and we're going to have to adjust our military going forward.
General Mark Milley, chairman of the Joint Chiefs of Staff. And don't miss that full conversation on the David Rubenstein Show, peer-to-peer conversations, tonight at 9 p.m. in New York. That's tonight, but let's take a look at what else we're watching today. And Matt is not here, so I have to be the car fanatic today. We have GM and Ford earnings coming out later. GM before the bell, Ford after the bell. The real focus is going to be on supply chain issues and the chip shortage, and how does that impact production, not just for the third quarter, but for the remainder of this year and even out into 2022. Guidance will be really important, especially considering their competitor in the EV space, Tesla, seemed to manage those supply chain issues quite well when it reported its own results last week. So it will be interesting to see how the other automakers fare in comparison. And usually at this point, Tom, is when Matt talks about some specific car that he's really jazzed about. I live in Manhattan. I don't drive a car, so I'm just going to have to leave it at that.
The last time I spoke to me was bigging up the Polestar, which is Chinese-owned, interestingly, and it's an EV as well. From a petrol head, that made me sit up and take notice. So from the hardware to the software, I want to look at eBay, because they have earnings out later today. There's a view from some that you may see a bit of a drag on this company as consumer spending shifts. More people get out, dine, travel. Possibly that's a bit of a hit on eBay for the third quarter. But Wedbush coming out and looking ahead to the fourth quarter, they say the catalysts are likely to be the holiday season, but it also could be a business that actually benefits from some of these supply chain constraints. You're looking at potentially $2.5 billion in terms of revenues for the third quarter. $10.5 billion is the forecast for eBay for the full year.
Yeah, companies that benefit from supply chain shortages, that's certainly something we're taking note of. Let me just tell you about the UK budget. We talked to Liz Martins at HSBC about this a little earlier on. There will be gifts for the Chancellor in a slightly looser fiscal backdrop for this coming through from the OBR with some a new forecast, but it looks as if that's not going to get spent in a hurry. Inflation fear is one of the things that might hold the Chancellor back, but also his fiscal conservatism. Do look for some news, though, around business rates, around energy bills, maybe that famous levelling up phrase, which gets used so much in UK politics, and yet so few people actually know what it means just yet. That is it for this hour of the programme. More Bloomberg Surveillance is ahead. We'll hear from Mary Barra, General Motors Chair, and CEO David Rubenstein, among others. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and like what changes they are actually bring to this market.
It does seem like the economic cycle is moving at warp speed.
Some central banks are trying to push back against this market view of where rates are going.
The market has repriced the hiking cycle significantly.
Market's been very quick to price out interest rate hikes by the Fed in the middle of next year.
We don't think that they'll actually be raising rates until 2023.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Coming into Wednesday with another all-time high from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market slightly negative, down 5 on the S&P. We're down 1/10%. TK, Big Tech doing what Big Tech does.
Big Tech
knocking
delivered.
it out of the park.
Absolutely, John. I was sitting there last night with a beverage of my choice, and I said, the first thing I'm going to do when I come in the morning is look at the Bloomberg analysis out. We're not going to dive into this now and slow down the show to Rebecca Patterson. But, John, the year-end 2022 of Big Tech is $1.404 trillion in revenue. Where is digital's place in America's future? It's ginormous.
The takeaway from Microsoft, Tom, this line from Satya Nadella: digital technology is a deflationary force in an inflationary economy. What do you make of that?
I missed that. We can talk to Rebecca about that. This is incredibly true and cuts that way as a deflationary impulse and the technological change. John, they got 31% EBITDA margins out to the end of next year. Everyone raising their price targets. Jeffrey's up big on one of them. I think Google, Piper Jaffray went up as well. John, it is a shift yesterday afternoon in how we perceive pandemic digital.
Lisa, price target raises at Jeffries, Barclays, BMO, on Alphabet. People have framed Alphabet as some kind of a disappointment. The stock's up 50-60% year to date.
And revenue almost doubled. Just to really drive the point home here, people are disappointed because of the cloud revenue coming in lower than expected. The idea of whether they're actually competing against Azure and AWS in the same kind of way that people had expected. But these were blockbuster earnings. My issue is what's being priced in already, and how much does this hinge, frankly, to what you were saying earlier, which is the rate hiking cycle and where we are in terms of benchmark rates.
We've got to spend a little bit of time talking about Washington as well. Any takers? Who wants to explain the billionaire tax here? Tom, would you like to go first?
I'll go first. Greg Valliere, always good, but today, John, exceptionally strong in a scathing note, part of it on the billionaire's tax. And what is so important, as we centered on with Anne-Marie Horton yesterday, is what is the chairman of the House Ways and Means Committee going to do? Congressman Neal of Western Massachusetts is, quote, furious over a vague agreement in principle wrapped around going after 10, 20, 40 people.
Tom, I saw someone say the tax base is now 700 people and 200 companies. That's the tax base now. 700 people, 200
It's
companies.
original. Seriously, what's the constitutionality of it? I'm not qualified to answer that. Lisa Abramowitz is.
No, I will say that that is the issue, right? That will this be held up in a conservative court? That's why I'm focused on the minimum corporate tax rate that really started percolating yesterday as well.
We'll head to DC, Lisa, in about 20 minutes. No doubt you've got a lot of questions, like a lot of other people. Equity futures down 5 on the S&P, negative about 0.1%. Equities just a little softer after another all-time high. In the bond market, yields come in a basis point on 10s to 159.39. Look out twos, TK. Your 2-year was at 50 basis points briefly, a little bit earlier.
Oh, it's curve flattening. The 2-10 spread, the difference between the 10-year yield and the 2-year yield, 110 basis points. This is now getting to be germane to the debate. John, 120 to 118 is not a big deal. 120 down to 110 basis points gets my attention.
Lisa, 2-year yields higher, 30-year yields a little bit lower.
This, to me, is the story of the day, of the week, of the year. What do central banks banks do with respect to the higher inflation rates, regardless of whether they actually can control them, but if they're due to supply chain constraints. We'll get a taste of this from the Bank of Canada today at 10 a.m. when they have their rate decision. The expectation is for them to remain pat. However, they are expected to curtail their monthly bond purchases quite substantially, their weekly bond purchases, as they have done 4 other times so far over the year. Here's the question, though. How does Canada, how does the Federal Reserve, how does the ECB, which will come out tomorrow, how will they all respond to inflationary pressures that are out of their control, that rely on supply chains and labor disruptions that frankly will just take time and other efforts to work through? Today we also get earnings from General Motors, and for the key question to me is how do they compete with Tesla, especially after with what we just saw, as well as, of course, the idea of how they deal with supply chain constraints, how they deal with some of these component shortages that have really delayed production. Tesla shares up over the past 2 years, a mere 1,451%. They aren't even percentage points anymore, even though General Motors and Ford have done really well. We're going to be hearing from General Motors CEO Mary Barra coming up later today, 8:45 a.m. Don't miss that. And at 1 p.m., Tom, I'm doing this for you, 5-year U.S. Treasury auction following yesterday's 2-year auction, which confirmed the idea of rate hikes coming potentially sooner than Fed officials expected. The idea here that the 2-year yield is now pricing in 2 rate hikes in the next 2 years.
The only thing constructive about 1 p.m. this afternoon is I'll be deep into the surveillance nap.
I'll be long gone too, Tom.
Yeah, thank you.
And then Lisa will bring you the balance sheet tomorrow.
What a preview of this auction. I'll be sleeping.
Lisa, thank you.
Anytime.
Joining us now, I'm pleased to say, Rebecca Patterson, Director of Investment Research over at Bridgewater. Rebecca, great to have you on the program. We're lucky to have you with us to start the program this morning. Let's start right there. How quickly we've repriced the front end of the yield curve. What's that telling you, Rebecca?
Well, I think Chairman Powell probably helped move the needle a little bit here in his comments on October 22nd, when he continued to say inflation would be transitory, but in a slight change of tone, acknowledged that we now have upside risks. And hard not to acknowledge that we have upside risks when you look at things from not enough housing to meet demand, not enough labor to meet demand, not enough ships, not enough trucks. So there's plenty of pressures out there. I think the big one, though, is going to be wages.
Rebecca, days long and go, and I understand the wage issue, but you were so good at pinning together all the dynamics of the market funneled through foreign exchange and dollar dynamics. What is the dynamics now wrapped around the Fed talk? What's the dynamics now you're studying every morning at Bridgewater?
So we think that this really was a demand shock more than a supply shock. This started because we had extraordinary fiscal and monetary easing, and that led to a surge in demand. And we see that every day now, whether it's high savings rates coming down, but still very elevated, record net wealth in America, incredibly strong balance sheets, both for consumers and companies, and a lot of spending. And so the supply is there in a lot of categories. It can't keep up with demand. We have more ships than ever on the ocean. Ports are processing more imports than ever in the United States. It's just that the demand is that strong. And so now supply can't keep up, and the release valve, if you will, is going to be higher wages, higher inflation. And what we're seeing in earnings season is that so far most companies can pass that on.
All right, so have we yet seen peak margin pressures, Rebecca?
I do think we need to be careful looking at margins going ahead. But again, what we're seeing so far from the earnings season is that there are a few companies pulling down guidance slightly because of the supply chain issues, but we're continuing to see very strong margin growth. I do worry as we look ahead and we start seeing the Fed pull back, right? We now have 2 hikes priced in for the second half of next year, that you're going to get this withdrawal of liquidity, starting with the taper probably at the end of this year and then going into rate hikes. The U.S. equity market has become substantially more sensitive to liquidity conditions. When we measure it, we now have about 40% of U.S. companies vulnerable to a withdrawal of liquidity. That's going to be primarily the companies with longer cash flows, longer duration, so technology in particular. And given the weight of technology, just the sector weight, that's something that we're keeping an eye on, a bit more cautiously, not bearish. We're still constructive on the U.S. market, but we think that what has been a huge tailwind is slowly starting to turn into a headwind.
Your view is different from most people that come on this program, Rebecca. I don't want to let that slide. You call this a demand shock. A lot of other people call it a supply side story. when they come on, they give their view on markets too. I want to understand, your view on this is different in the sense that you say it's a demand shock. How is your investment thesis different, if at all?
Well, we started out the show talking about the Fed, right? And what are central banks going to do in general? And when we saw this demand shock, we thought, okay, we have this backdrop that's going to allow for a lot of spending. Companies aren't going to be able to keep up. They're going to have to raise wages to bring labor in, to get the inputs in. So how is that going to play out? It's either going to be higher inflation for longer than what's priced in, or it's going to be a Fed that has to catch up versus what's discounted for Fed fund rates. So we've been positioning our portfolio for both. Assets that would benefit from higher inflation and, oops, that was interesting. That was me not moving enough. The lights just went out in here.
The lighting is still good. The lighting is still good. Keep going, Rebecca.
Well, as long as I look good,
you
that's
look fantastic.
fine. That's very important. So anyway, the point is that we've been positioned both for higher inflation and for higher yields in our portfolio, and thinking about what do higher yields mean for other assets. Tom, to your point, be it the dollar, and we are constructive on the dollar for now against certain currencies, or for equities. Which equities are going to be more vulnerable to higher rates? Which companies will benefit from higher rates? So something like financials, great earnings. Part of that is that yield curve, which today is going against them a little. And then the companies more vulnerable to that liquidity withdrawal, like we said, technology would be an area we keep an eye on.
Rebecca, thank you. It's good mood lighting for this time of the morning.
Absolutely.
It works.
That's just Dalio cost control, right?
Yeah, I'm sure.
They're cutting costs of Bridgewater.
It's our sustainability effort. Come on.
Of course. Rebecca, thank you. Fantastic as always. Rebecca Patterson there of Bridgewater. Tom, just a sense of how they're thinking about the world at the moment within Bridgewater and how it's slightly nuanced compared to, say, a lot of people on the street who would call this primarily a supply-side shock.
Yeah, let's be clear. Ray Dalio is a piñata on this. I mean, he's a magnet for criticism and the big view and all that. But the company generates, John, really interesting and controversial views wrapped around original interest rate parity strategy and now taking in Rebecca with her history from JP Morgan and from Bessemer Trust. It's a much more holistic, broader view. What I love there, that comment, John, this is a demand shock, that is controversial.
A positive demand shock at the start of this year, Tom, going into a supply-constrained economy. And because of that, Lisa, this is why people go full circle back to the decision made by this administration to really juice this economy as it reopened.
Which is the reason, well, this is one of the reasons why inflation is such a hot topic, because people are saying it's because of some of the fiscal policies earlier in the year that we're seeing some of the inflationary pressures that are crimping certain Americans.
We got to head down to D.C. AMH tells me that billionaire tax is 107 pages long. You've been reading it, Tom?
I'm into it right now. Seriously,
pages.
I'm reading it right now.
Sure you are. Down 3 on the S&P.
Oh, they misspelled Bezos.
Negative 0.1% from New York City. This
they
is
spelled
Bloomberg.
Musk correctly.
With the First Word News, I'm Laura Wright. On Capitol Hill, Democrats have unveiled 2 new taxes they hope would help pay for President Biden's social spending package. One would target billionaires' assets of those who earned at least $100 million a year for 3 years in a row. The other is a minimum tax for corporations. It would require that companies that report more than $1 billion in profits to pay at least a 15% tax rate, even if they qualify for lots of tax breaks. China has slammed U.S. efforts to boost Taiwan's participation in United Nations organizations. Beijing says the self-ruled island has no right to join the UN a half-century after it was kicked out. Secretary of State Antony Blinken has called on other countries to join the U.S. in pushing to give Taiwan a greater role at the UN. It's another blockbuster deal involving Hertz and Tesla. Uber drivers in the US will be able to offer services with Tesla electric vehicles rented from Hertz starting next week. Hertz will supply up to 50,000 Teslas to drivers for the ride-hailing giant by 2023. Earlier this week, Hertz ordered 100,000 cars from Tesla. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology, and technology companies as partners. So some
Not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look
the bow
great.
tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We know that we are close to a deal being signed.
We are united behind this legislation, and I want to make it very clear. When you're united, it doesn't necessarily mean that you're unanimous.
We're on the precipice of something really extraordinary that is going to transform the lives of working people in this country.
Representatives Joyce Beatty there of Ohio, Jim Clyburn of South Carolina, and David Cicilline of Rhode Island. From New York City this morning, good morning. Tom Keene, Lisa Abramowitz, and Jonathan Ferro. Your equity market, -2. We're down 0.05% and pulling back from all-time highs by a whisker. In the bond market, yields in a basis point on 10s to 159.39. It's the front end that gets your attention. The front end of the yield curve. Yeah. This move is building towards 50 basis points this morning. Very briefly through that level, up 2 basis points right now to 49. 1 week from now, you will hear from the Federal Reserve Chair, Jay Powell, after that news conference and decision with the Federal Reserve. What we've heard so far from the Senate Finance Committee Chair, Tom, is the following. There are 2 tax codes in America. The first is mandatory for workers who pay taxes out of every paycheck. The second is voluntary for billionaires who defer paying taxes for years, if not indefinitely.
It is. And I mean, this is the debate right now, and a lot of people saying there has to be change here, but is this the way you do it? Let's bring up one of the subsections of 107 pages here. I picked this out very quickly. It's page 4, so it's at the top of a document in process as well. I'm not even going to read it to you. On radio, it's real simple. Subtitle A, elimination of blah, 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 holding period. For purposes of this title, any taxable event described in subsection B1 with respect to any tradable covered asset shall not be taken into account in determining the holding period. That, and, you know, I talked to your accountant. Joining us now, she does have an accountant, Anne-Marie Horton, Bloomberg Washington correspondent. Are the 107 pages as printed, Anne-Marie, anywhere close to what we'll see?
It's a great question. There's still a lot of concerns, even within the own party, on whether or not they can actually push this billionaires tax through. First, you have the House Ways and Means Committee, which already says we had a plan that the public liked, that had wide support, but of course there was a holdout in the Senate, Kirsten Sinema. We don't know what she thinks about the billionaires tax just yet. We do know that she's on board for that 15% minimum corporate tax. So really 2 big tax details coming out of the Capitol yesterday. When you look at the billionaires tax, though, the other big roadblock potentially is does this pass the 16th Amendment? Will this muster up in court, or will they say this is unconstitutional? This is a brand new way of looking at taxation and wealth in this country.
I think this is really, really important, Anne-Marie, because what it finally reveals are the numbers behind political slogans. When you hear a lot of people say things like tax the rich, that people need to pay their fair share, what it actually comes down to is 700 people and 200 companies. Now, Anne-Marie, you never hear that on a campaign trail. What you often hear is very highly divisive language about there are a group of people that don't do their part for society, there are others that carry the burden. That doesn't match who actually pays ordinary income taxes in the United States of America, a highly progressive tax code for ordinary income taxes. And what it finally reveals, and I'll repeat it, Anne-Marie, that the numbers behind the political slogans of the last several years, including that white dress with tax the rich, it's 700 people, it's 200 companies. Anne-Marie, that's quite revealing.
It is quite revealing. This is a small subset of the American population when you look at it like that. Although Senator Elizabeth Warren said yesterday, I think her graduating class was more than the billionaires that they would be able to tax through this. But we should try to explain what this tax would actually be. Reading through the 107 pages, it'd be quite confusing. What this actually would do is that, say you bought a stock and you paid $5 billion in all that stock you bought, and today it's worth, say, $30 billion. You would have to pay taxes on that $25 billion, that gain, that wealth appreciation at a 23.8-something% rate. It's nearly $6 billion that would be going into the system, and they'd give you about 5 years to do that. So for someone like Tom Keene, that would probably mean a little bit less Hermes bow ties or Bottega Veneta wallets. But this is potentially a way that they are trying to scramble to get the money to push through this massive social safety net, through reconciliation for Medicare, climate initiatives, and a host of issues.
Anne-Marie, a lot of people are sort of discounting the billionaire's tax as something that is really questionably going to pass or not through the Supreme Court, considering the composition there. That's why people's focus really has been more on the 15% minimum corporate tax that would tax actually revenues. It is a different method of taxation to try to capture, frankly, the big tech giants in particular. Can you give us a sense of how realistic this is of passing and how much bipartisan support it may have?
This definitely has more momentum towards it. When we had got the details of this yesterday, last night, we heard from Kirsten Sinema on Twitter giving it her blessing that this is the right, quote, common sense approach is what she called it in terms of how to tax corporations. Remember, she was one of those